Morning all, how are we doing? How's everybody? Very late as usual on a Thursday. Always late on a Thursday. Morning Peter, Amy, Sean, Potgator. How we doing? Morning Steve, JC, Stevie, Andres, Virginia, Jerry, Franco, Keith, John and David. How are we all doing? And John again. Another John. Got two Johns. Right, haven't had a chance to look at anything yet this morning because I've literally just sat down, turned the computer on and pressed the button. So let's have a quick look at the news, catch up on what's going on overnight. We've got a few stocks today. So aftermarket, we need to look at what happened to Tesla, Netflix and IBM. Pre-market today, we've got Blackstone, Johnson, Newmont, PMO and TSM. So there's a right mix of sectors there. So let's have a quick look at what happened overnight with the earnings. Okay, so Netflix, EPS 3.29 on 2.85. Okay. So that's a hit. Tesla up. IBM up. Okay, so all good across the board. So Netflix subscriptions up 8%. Tesla books record revenues. Tesla shares dip after hours as earnings call disappoints. Really? Record revenue. Makes sense, does it? The Japanese exports are down. It's not good for the yen. Move up against the yen. China interest rates. Australian unemployment. Okay. Right. Okay. So today, we've had the unemployment rate for the Australian dollar overnight, which is 3.5. So it's positive New Zealand dollar, positive Australian dollar on those unemployment. So we had 3.5. They were forecasting unemployment to go up. It didn't. It stayed stable. So that's bullish. We've got unemployment claims this afternoon at 1:30 for the US. That's really it for news. Existing home sales won't do anything because we have the housing starts, which is the important part. Building permits. That creates jobs. That is basically people moving stock. So that doesn't make any difference. So unemployment claims this afternoon. So Australian dollar and New Zealand dollar, I'd imagine, have had a little bit of a rally overnight. Here we go. Strongest of the two is the Aussie by the looks of things. Yeah, Aussie's beating New Zealand dollar. New Zealand dollar had a bit of a rally, pulling back a little bit now. New Zealand dollar CAD. I'm going to stick my TP there, which is an ADR. New Zealand dollar Swiss rally, all pulling back a little bit at the moment. Right, let's have a quick look at what's happened with the stocks this morning. 5 minutes to the open. Big move down on the DAX. Right, so DAX is dumping at the moment. Dow's pretty stable. S&P's pretty stable. Okay, so it looks like the market is selling off. That's interesting because that's not actually bad news. I'm not quite sure why those Tesla shares have dropped. Record revenues, but obviously profit must have been down. Revenue climbs on Netflix, so that's bullish. Price cuts. Oh, looks bullish to me. I'm not quite sure why we're getting a bearish reaction, but we are. So we'll see what happens with these today. We are tapping into support on the NASDAQ at the moment. S&P's pulling into yesterday's low. The Dow's pulling into the Globex highs at the moment, which is that low from New York. But it's coming down on the DAX. See what happens. Will be what it be, won't it? Morning, Ritz. Morning, Kennedy. Morning, Neo. Jacob, Burke. How are we all doing? So if any of you are new, I have a spin class at 6:30 on a Thursday, which I'm always like literally running back here. So I don't stop sweating for about half an hour. There's a dropping due to margin low due to price discounting. Okay, so yeah, top revenue, bigger revenue, but slower profit. That's typically what the if a stock drops on positive earnings, it's usually because the profit's down. The shareholders obviously are not happy with the result. So let's look at the DAX this morning. So obviously, when you get the reason we pay attention to US dollar stocks ahead of the DAX open. Obviously, none of these are in the DAX, but they are indicative of what is happening in sectors. So if the motor sectors had bad earnings and the tech sector has had bad earnings, there will be motor stocks and tech stocks in the DAX as well. So when they see bad earnings on someone like Tesla, they will assume that we're going to get bad earnings across the motor sector. So they will sell all motor stocks. So, for example, the DAX has BMW and Volkswagen, big obviously motor. So if they're going to sell Tesla off and Tesla shares are dropping, they may well sell the motor sector. If they sell the motor sector, the DAX will come down today. A la that. So we may well get, just as soon as the bell goes, we may get a dump short today. We'll see what happens. Monster day yesterday, made another 7 yesterday, I think it was, 7 grand, something like that. It was, but yeah, I mean, big day yesterday. Again, lovely big runs on the indices, big opening range breakouts. So let's see where we go this morning. We've got 1:30 to the open. I haven't even had a chance to have a look and see if I can bank anything this morning. Aussie dollar Swiss, haven't banked anything yet, have I? Aussie Swiss long, I'll keep that long because the Aussies had good news. Euro New Zealand, short. New Zealand's had good news. Look at that. Just missed TP on that. Do I bank that 0.25%? What's going to happen to the euro this morning? New Zealand dollar yen's had positive news. Frank's dropped a little bit on the US. I watched that first hour. Right, DAX. 20 seconds to go. I haven't even had a look at Telegram this morning. I haven't looked at anything. Okay, so there's your 15-minute pre-market. Your 5, if you want to take that. No gap fill. So straight out the short side today. It's my auntie's birthday today. Got a few RSIs to look at. Any ADRs? We've got a few ADRs as well, obviously, on the Aussies. So DAX today, the pre-market 15 is short. Pre-market 5 and 15. It's tipped out the lows, now broken high. So if you took the 5-minute pre-market whipsaw at the moment so far, and the 15-minute whipsaw as well. So depending on where your stops are, you're either hedged or stopped out on a whipsaw. Fun morning, eh? If that's you. I haven't taken that this morning because the range was too tight. I think I need to remind myself of the rules on this. Condition's not right. Minimum range size is 150. It's under the minimum range size. So the range pre-market range was too tight today. And that's exactly why I'm analyzing this new version of the EA. Historically, when you backtest range sizing, tight ranges get whipsawed more often than wide ranges. So that's the reason for the EA, this version of the EA, bypassing that, because it couldn't find a range that was wide enough to take, because that initial candle whipsaw. So, going to take the 5-minute ORB today. So let's have a quick look at potential upside downsides today. It's a tricky one because we're kind of in the middle of this possible rejection. Market is trying really hard at the moment to go back long again. So we're in this expanding wedge pattern. Expanding wedges are very difficult to trade because they're not bullish, they're not bearish, but they are volatile. So you never know really which way anything's going to go when you're expanding out like this. So it's basically the market trying to decide whether it's bullish or bearish. So at the moment, upside target is 200 ADR. Downside target is obviously all the way down there. So today on the DAX, we've got the yesterday's low, which we're below at the moment, and the previous day's low and the day before's low, all within ADR today. So there's potential limit buys going to be happening down at these levels. Potentially, it looks like it's putting in a head and shoulders, doesn't it? So if we rally up today, we might look at a head and shoulders pattern. Upside target would be yesterday's high, which is basically ADR. So if we rally long today, I would expect us to find first resistance at ADR. We have got this area here as well, potentially within that, and we've got another level. So it's a very, very tricky area because there is so many different spots that you could find resistance. To the downside, you've only got those two, and then obviously this high here and this area here is basically the next support, which is 175 ADR. So if we did flush out on that Tesla earnings, selling off BMW and Volkswagen, big old opportunity for a flush today. So we'll see where we go. Morning, Sibo. Morning, Whipping Post. Morning, Seymour. So it is breaking short. Give me a sec. Pound odd 125 ADR. So the pound, the Australian dollar is still rallying. Okay, 9 seconds. So there's your DAX 5-minute range. There we go. So there's your 5-minute ORB. Going to take a break of that 5-minute ORB. See where we go. Right. So while we're waiting for that, let's have a quick look at that Aussie dollar. So pound odd 125 ADR, pound coming down hard, basically off the back of this Australian dollar strength. And it looks like this is probably partly to do with the pound weakness as well this morning. Yeah, pound's weakening this morning as well. Doesn't help my pound Swiss. A little bit too much on that pound Swiss. This Swiss franc at the moment is absolutely killing me. CAD Swiss is started. I really want to get out of one of these Swissies, either the US dollar Swiss, the pound Swiss, or the CAD Swiss. I want one of these or two of these to rally today. This Swiss franc needs to take its foot off the gas. I'm worried about an accumulation break to the downside on this. So I'm just hoping that they're going to get this profit take moving now and sort of ease off the Swiss franc a bit. What we could do with is some decent US dollar news this afternoon on unemployment to give the market a bit of a chance to rally back into that US dollar because they'll pull Swiss franc out to do it. But that will help the Canadian dollar as well. So the CAD Swiss will rally, the US Swiss will rally. If we can get an ADR hit to the upside on these today, that gets me out of both of those. But really, really struggling the Swiss franc at the minute. So pound's coming down again this morning off the back of the interest rates yesterday. So weak pound, which we're expecting. We've got support areas turning up on these as well. So you're going to start getting some RSI extensions on these for H1M5 mean reversions. I've got a couple of them already in on those anyway at the minute. What happened to oil off the inventories yesterday? So oil inventories yesterday, we got the reversal alert on the hourly. Didn't do anything though. So the inventories yesterday dropped oil. Didn't get a break of that high, but we are holding stable now. So this is a week now. We've been in this range. So we're forming a range up here on oil. Still looks bullish to me at the moment. So that was a beautiful rally. And what we're doing at the minute is we're sitting on top of this support resistance zone here. Yeah. So if you extend that across, let's draw it on with the box, shall we? It makes more sense. So this area here, basically. Yeah. So pulled down, that was a support. Pushed up, turned into resistance. Broke it. Now it's a support again. So looks bullish. So looks good for longs. This is also pretty much a 38 retracement on that pullback. So it's not quite. 38 is there. This propulsion gap, but this is a very strong resistance previously. So I would expect it to turn into a strong support if it's been a strong resistance. So it may be that this is the pullback. So it's more of a kind of deep flag, and then we're going to break out to the upside. So watch this one today. I think if you went long pretty much now off the back of that reversal alert, or waited for a reversal alert this morning on M5, M15, there's your M5 there. So if you took that this morning, that's a long way away. Big drop obviously yesterday, I guess. Yeah. M15 is pretty much the same place. So if you take up that break this morning with a stop under there and assume that we're running for that $85 a barrel, that's a pretty good entry, I think. It's obviously a very long-term trade. Yeah, so you're going to need to hold it. But that's 4R up to the high, which is basically 83.5, 84, which is potentially this target with $95 a barrel is what the market has called as target. Oh, God, delete the fib. Yeah, which is, you have to go out to H4 to find it, but $95 a barrel is here. Yeah. So this somewhere around here is what the market has called this year as the target for oil. It was originally 107, which is pre-Ukraine peak. So when the war broke out in Ukraine, yeah. Where's 107? Let's put it on. So that's 107. So this was the build up to the war. That was the breakout of the war. Yeah. So this is where we were headed pretty much before the war kicked in. And so that's what the market initially called this year. And then they reduced that target, revised back down again. So 95. Put that in as well so we can see it. So somewhere around there. Obviously, that's not initial target. Initial target would be that peak at some point in the next month. Okay, DAX is still an inside bar at the moment. So there's our 5-minute opening range. We haven't broken the opening range yet. So we're contracting. So we've got an inside bar. Inside bar. And now we are an inside bar on the inside bar, which is if you go down to M1, you'll find it's a symmetrical triangle contraction. Break at some point, and then we'll get the rally. So no entries yet. Right, let's look at ADRs. So your ADRs today, there's four of them. Obviously, most of this is obviously Aussie. Well, it's all actually Aussie dollar based this morning because we had the Aussie dollar news. Unemployment rate is down, which is bullish for the Aussie. So first one is Aussie dollar CAD. It's just come straight off of ADR today. So these Aussies, I would be looking for bullish moves on Aussie and New Zealand at the moment, because we've had New Zealand dollar news, which was bullish. So the CPI for the New Zealand dollar was higher than expected, which means it puts more inflationary pressure on, which makes the currency more valuable. It also increases interest rates, which makes the currency more valuable. So that's bullish for the New Zealand dollar. We didn't get a massive bullish reaction off of the back of that. So we're kind of a delayed reaction on that. We've now had the unemployment rate dropping in the Australian sector. So Aussie and New Zealand had two positive news events this week, which we haven't had much reaction to. So I would expect the Aussie to now start to get rolling a little bit, hopefully, with the New Zealand dollar. So again, we're contracting here at the minute. So I would look for a break and test of that high at some point. But at the moment, we're pulling back off of ADR. So these are all ADR hits to the upside. So up to you if you want to take them. Obviously, when you hit ADR, market is exhausted, and intraday it will often pull back. Those are your scalp plays, your quarter ADR, half ADR, third ADR targets. So dropping down M5, you take the reversal alert there, and you're going for, third of an ADR. So quarter of an ADR, and this is 19, for example. So that's 19. That'd be your target, or a third of an ADR. Half an ADR is 39, which is down there. Third of an ADR somewhere around there. So if it's a scalp play, you're only looking really to get a quick move out of it, because potentially could rally away back up to the top. So that one, you've got your reversal alert off of ADR. Aussie dollar, New Zealand dollar. You haven't had a reversal alert on that one yet. I've already got one short on this, which I'm not particularly sure I particularly want, but I have. So that's coming up to 125 ADR. We're up at the highs. We've just tapped straight into the weekly high and pulled off of it. So this is just starting to reverse now. Reversal, that's a fair old way away on this. So bit of a tricky one to get into, but that is that's not a very good level at all. Ignore that level. That's the weekly high there from last week, but it's not, 2 weeks ago, but it's kind of, that's Monday. So Monday had a bit of a rally and collapsed all week. So it's not a very good level at all. So you've got one potential short there. Again, that looks a little bit head and shouldery, potentially. Aussie dollar, US dollar. So that has come off the highs. Maybe getting strong US dollar movement this afternoon. Still no break on the DAX. So if we get that bullish US dollar move this afternoon, this will be coming down. So your reversal was literally tapped straight into ADR, straight into the previous day's high. M5 reversal alert is there. So that's your entry short this morning. We're retesting. So that would be your M pattern. Not very nice though, because it's just a news accumulation. Very difficult to read this Aussie move. Not quite sure what it wants to do. Same here, like news, not sure. So you've had your reversal alert on that one as well off of ADR. These have only just really grabbed ADR. Pound odd, 125. About to get a reversal alert on that one as well. Lovely big targets off the news to come and tap into. So these aren't great ADRs today. I'd be, they may well work out. You never know, obviously. But the fact that we didn't have that rally on the New Zealand dollar and now we've had positive Aussie dollar news, I would expect a little bit more strength off of these Australian pairs, but they're a bit lackluster at the minute, aren't they? So there's all your ADRs. There's quite a few weeklies. We've already looked at them. We're on Thursday, so that all of these are extended on the weekly are all ready to undo. So RSIs, there's a few of those to look at as well. DAX has broken long. So we're long the DAX. So upside target today for the DAX. This is the tricky one today. So this level here is the previous day's high, which is there. It's the close, basically. So it's the close of Tuesday. We then opened up, rallied. That's yesterday's high, which is ADR, right? So upside targets today, you'll be looking anywhere, literally anywhere in here yesterday can act as a support resistance. So it's very tricky to target. But if it's going to rally today and it's going to run, we're going to go to ADR. I'd be surprised if this ran today. But the difficulty with the DAX, if you have a look at the stocks that are contained in the DAX, we've got BMW, obviously, motor. And we've got Porsche, yeah, and Porsche Automobile. And then we've also got Volkswagen, yeah. So these are three huge car manufacturers. We've also got Daimler in there as well. But so when you get a motor sector buy or sell happening, the DAX gets affected a lot more than others because three of the major stocks within the DAX are the three of the biggest manufacturers of motor worldwide. The problem is Tesla a tech company or is it a motor company? That's the question. Because it's an electric car only manufacturer, obviously it is in the motor sector, but those other players aren't pure electric motor sector, are they? So, and Tesla obviously is a very high-tech company. So it's one of those stocks which is kind of floats around multiple sectors. So I'm not sure if those earnings reported, if you look into the actual earnings for yesterday from Tesla, and actually why the profitability was down, you might find that it's not actually to do with motor sales worldwide. It's not to do with an industry drop. It's to do with the fact that they've dropped the prices of their vehicle, which could be based on excess of battery storage. All sorts of other things could affect it. So I would have expected Aussie New Zealand 125 ADR. So still got the Aussie dollar pushing hard at the moment. Oh no. Yeah. So yeah, so it typically I would be saying this probably is more of a short today, but is Tesla stock price going to drop the motor sector or not? That's the question that you need to be asking yourself, because three of the biggest stocks in those 40 are motor. So Tesla is an energy company, makes more from its power sector, storage batteries than cars. Yeah, see, this is the thing. Tesla's a multifaceted company, isn't it? So is it going to be the energy sector? In which case, then you want to look at how many of these are energy-based stocks. E.ON. E.ON today. E.ON's up today. You've got Mercedes in there as well. Sorry, yeah. See, I mean, this is a massively over motor weighted stock index. The DAX. We've got Mercedes in there as well. I missed them. Siemens, big solar. They're down 0.6. Siemens Energy's down 0.7. Tricky. But anyway, it doesn't matter too much because this is a momentum strategy, the opening bench breakout. So we're going with momentum. Momentum at the moment is long. We go long. See where we go. Right. At the moment, it's not really doing a lot, though, is it? So I'll be watching these propulsion gaps here. This is the sell-off end of market yesterday. So this is where a load of dumps came in. If they want to drive it short today, this is probably where they're going to start doing it. So if we flip here, we'll see. I'm just going to let it play out. Right. Just catch up with the chat. Morning, Babika. Morning, Blue Raider. Blue Trader. Undo. Morning, Astro. Franco, still plenty of jobs here in the USA if you want to work. If you want to work, that's the big question. Inflation is really killing any alleged salary income gains. So more funny bookkeeping numbers that will be revised next day. It is at the moment. Same over here though, but you know we've got 700,000 people coming out of fixed rate mortgages this year who are suddenly having to find another £700, £1,000 a month just to live in the houses they've been happily living in for the last 2 years. Yeah, if you've got a fixed income of say £3,000, £4,000 a month, and all of a sudden somebody says, "So you need another 25% on your wages now just to stay the same," they're not going to be able to do it. So this is why we've got to get on top of inflation. They need to put these interest rates up. Unfortunately, if they don't, we're all stuffed. So all these countries that keep pausing interest rates are just not helping at all. Yeah, you know who you are: Australia, New Zealand, USA. Yeah, not increasing your interest rates is not helping your people. Short-term pain, long-term gain. At the moment, it's long-term pain, long-term pain. Short-term pain, just pain. Not doing it. Right, RSIs. Aussie yen, euro pound. We'll have a look at those in a sec. How's my workout? Very good. Always is. Morning, Soren. Morning, Devon. Do you trade full-time? Yes. Echoes of 2008 everywhere. Yeah, I know. Live through another 2009. Right, let's get on with the RSIs first, and then I'll have a look at those other two. Scroll up to remind me. Swiss yen. So Swiss yen is a 4-hour RSI extension, not particularly extended. It's a little bit extended. The yen, I'm really unsure on as to what's going to happen with this yen. Very difficult. We've got the monetary policy coming out next week for the yen. Now, they have been stuck on 0.1, minus negative 0.1 interest rates for 6 years now, maybe even 7 years. I don't know. I've been saying 6 years for such a long time. I don't know how many years, but basically they don't change their interest rate. They have hinted this year at changing this interest rate to a plus 0.1. Now, sorry, not 0.1, plus 0.1. I don't know what impact that will have, because since I've been really following fundamentals many years, I've never seen it anything different. So I don't know what impact that's going to have increasing the interest rate. But we've got their outlook report and monetary policy statement coming next Friday, along with their CPI figures. So next week, at the end of next week, we've got potential market moving events coming for the yen. We've had this rally across all yen pairs, which is great, but it is now waning. So I've got a few longs on some pairs against the New Zealand dollar, against the yen at the moment. New Zealand yen and US yen, I think it is. Oh no, I'm out of US yen. Just got out of US dollar yen yesterday, didn't I? So it's difficult to tell what's going to go on with this yen at the moment. So I would probably wait until we get some decent extensions on this before you start getting in. So if, 70 extension on the 4-hour RSI isn't enough for me to really want to short it at the minute. So I'd leave that for the moment. Euro Swiss. I've got longs on this one already. It's a 4-hour RSI extension, but it was a 4-hour RSI extension last week, and it was more extended. We've got that pullback. Haven't managed to get out of it. So it's a double bottom, hopefully bounce. So I've got Euro Swiss, Pound Swiss, US dollar Swiss, CAD Swiss, all long, waiting for this Swiss franc to chill. Yeah, it's had a big, strong run. All the money out of the US dollar and the Canadian dollars flown into the Swiss franc, which has really bolstered this. This thing's really in need of a profit take. Not so much on the Euro Swiss, but the other pairs a lot more. So good looking long opportunity if you're not already in it, but you may well and probably are in it on the hourly RSI extension, which started all the way back here. We were looking for this move up to continue, didn't get it. Euro pound extension to the upside, in one on this yesterday, so that's extended on the 4 hour. This was also extended on the hourly yesterday. Big extension, first entry there. Hopefully that's just a retest. So we're going to get an M pattern reversal, pulling back into propulsion. Pound CAD extended on the hourly, the downside. Again, out of my sells on this yesterday. I'd also had another sell on there. So flipped long. We've got the hourly reversal at the moment. We're retesting. So we came straight off the weekly low. Yeah, I keep going on about support and resistance. There is a reason. And we're bouncing off it again today. So hopefully that is going to be a W pattern reversal. My target is all the way up there. I'm going to move that because I've now got... Oh no, I've only got one position on that. Well, that is the ultimate target. However, if we do get a push up into here, I will probably get out with a tiny profit on this. I'm wary about longing the pound at the moment after those inflation figures. So I'm waiting for Bailey to come out and confirm his stance on this, because we've had this CPI figure drop, and it was a 0.3 year on year, which is a big drop. We were expecting a 0.5 drop. We got more, much more, which is fantastic for us in the UK, because it means they might be able to drop interest rates a little bit, which is what we want. But we haven't heard from Bailey yet as to what his thoughts are on what we're going to do with interest rates. We were looking at a 6.25 terminal rate. We're sitting at 5 at the moment. We want to know, is it still 6.25, or are you dropping that maybe forecast down to 5.75? If so, how are you going to get there? Are we going up in half points or quarter points? We just need a bit of info. So the market at the moment obviously is doing what it should be doing, which is dropping on that figure. But we haven't heard from Bailey as to what's next. So we're waiting for that. Retail sales tomorrow. So I'm keeping my eyes peeled for anything from Bailey, but we haven't had anything yet. So until we get some confirmation, I'd be wary about longs. And, you know, if it got up to here, for example, today, it's the sort of thing I would just break even. And if it stops me out, I'll just go, oh, well. And if it then flies, oh, well. But what I don't want to do is get stuck in a multi-week squeeze on multiple pound pairs. Because if Bailey comes out and says, this is the best news we've had since sliced bread, we're only going to put up another 0.25%. The pound is going to collapse, properly collapse for weeks. So just be careful. It may not. As I say, we've got no confirmation. All we've got at the moment is brilliant. Inflation's come down a little bit more than expected. We've been expecting it to come down for months. They've screwed it up. It hasn't done. So now it's starting to come down. The market's like, well, is this really the start of it, or is this just a one-off and it's going to pop up again? Because don't forget, last time we were expecting it to drop. It didn't. It stayed where it was. So this is an overreaction to what we were expecting last time. So it's pound is hard at the moment, but pound Swiss is easy, obviously. Swiss franc's going nuts, and it will stop going nuts. So this is one that has actually got a chance of rallying, and it's not going to rally because the pound's going to be strong. It's going to rally because the Swiss franc is going to be weak. As soon as we get some strength in that CAD or that US dollar, or in fact probably the yen as well, if that can rally, they'll pull that Swiss franc out, and this will just go up anyway, just because the Swiss franc's weak. So this is a manual position I took yesterday, which I shouldn't have. I was worried about the EA not getting into a trade, and then it collapsed, and then the EA got me into one. So I've now actually got 3 positions too close together. So I'm over leveraged on this a little bit. But it is what it is. Half an ADR, and this is 37. That's 49. That's 39. So I like to get in 3/4 of an ADR apart. So little bit too close. Whenever you get into trouble position trading, it's usually because you've scaled in too quick and it's dropped. So I'd kind of like to see this get back up here today, and then I can take that one off. But yeah, nicely extended on the hourly, nicely extended on the 4 hourly. Yeah, the Swiss franc is just had, you know, the time of its life. But It can't last. They're absolutely loaded on this. They need to get out of some of this profit. US dollar Swiss as well. Same thing. Extended. We're stuck. We're embedded. The 4 hour, the 1 hour RSI extension. We've come out back to the 50 level. This is what worries me about this, which I hate it when this happens. You get big, strong push. We're massively extended and embedded, and then all the market does is pull back and move sideways. Yeah, bad divergence. We really need some US dollar strength. We need some positive news on the US. So hopefully this afternoon we're going to get this unemployment claim number come out decent, and we'll get a big, not a big push, but some strength. That's all we need, some strength on that US to get it kick-started. As soon as the market sees that starting, they will start to buy it, and then we'll get the move hopefully underway. But so those are your RSI extensions. Aussie dollar yen we'll have a look at. So DAX is still long. New highs on the session. Propulsion gap and resistance. Struggling. Yeah, this is not a very convincing break at the moment, but this is going to be hard work. It's always hard work, yeah? When you're trying to go long through a load of price action that has been coming down, there are a million places where large moves started as a seller they could add. So you've no idea in here where the bulk of the selling is. You can see on volume profile where the bulk of the selling is. And that's one of the advantages of volume profile. You'll see the volume profile on this day be like that. And you'll be like, yeah, that's where most of the selling happened. And that's where you'll find you get that nice resistance, which is why that works so well. But on days like this, basically, you just need to be thinking, right, there's a lot of sellers yesterday. At any point, this thing could just get hammered down. So the buyers have got a lot of work to do. They've got to push through all this resistance today. And you can tell it's immediately struggled to get out the highs. It is rallying now, but it can get pushed down twice as hard. When you see this, it's like a big candle which takes 5 minutes to go up, and then they just go boom. Just means that there's not enough buyers in the market to get the momentum going. So these are the days you look at and you think, right, well, if we get up to there, I'd be better off either taking that off because it's just struggling to get anywhere, or break even. So if the sellers do actually rally this back down again and continue yesterday's move, I'll break even on that and flip short. But those are decisions you need to make when you see the price action unfold. Aussie dollar yen. We're up at the highs. Or approaching them. Not anything at the minute. Short was there. Long was there. It's nothing at the minute. So we're approaching, obviously, this support resistance area at the moment. So more short than long, but it's the Aussie dollar. We've just had positive news. So I'd be bullish Australian dollar today. But again, this Australian dollar, yeah, off the back of this news, it's not really inspiring confidence, is it? Not gone anywhere for 5 hours. We've had a beautiful news event. Everybody's happy, but nobody's really interested in buying it. So just nothing for the moment for me. Euro pound. So that was an extension yesterday. First entry was there. TP is in propulsion. Looking for that retest of the reversal. This candle here. When this candle closes, this will be your retest arrow. So that is your M pattern. So we've retested the break, and it's held. If it holds, obviously. But you got 25 minutes left. That would be, if you're going to take the retest of the market reversal alert, you'll take that. There we go. Australia has a very over-leveraged property market and a banking sector which is 100% domestic. Little international banking presence. That's why they're being hesitant on interest rates. Don't really know much about the economy in Australia, obviously, but interest rates are the main tool for reversing inflation, basically. So if inflation keeps going up, everything gets more expensive. Therefore, you have to put wages up, which puts pressure on businesses, which puts pressure on the economy, which brings the GDP down and makes your country poorer. So when inflation is going up, the best way to stop people from spending money is to encourage them to save money. So if you put the interest rates up, you make more money by putting money in the bank, and your mortgages go up, which makes you poorer, which makes you stop spending money, which makes businesses reduce the cost of things, which brings inflation down. So this is the main tool all banks, all economies, countries, banks have for dropping this. There are other tools, but this is the main one, and this is the blunt instrument. This is the easy one to use. But it's also the most difficult to use, because if you put this up too fast and too hard, this comes down too fast and too hard. And if this goes too far down, people get ridiculously rich. Well, I don't get ridiculously rich, but it goes too far the other way. So the target, all countries have a target of roughly 2%, which is a stable economy, which keeps your GDP growth, your country growing. It keeps your population happy and wealthy, businesses ticking over nicely, making profit, and everybody's happy. That's what everybody wants. The pandemic has screwed everything, and it screwed it so fast and so hard that we're having trouble getting out of it. So I understand why they do this, because it is a problem. This here is the main cause of unemployment, as well as housing collapses. So the housing market in the UK, for example, is as buoyant as it's been since I've pretty much been alive. I bought my house. I'm not going to tell you what I paid for my house, but I bought my house for 200 grand less than it's worth now, and I've lived in it for 4.5 years. It's gone up a lot. And that's because everything's been flying. Everything's been going very, very well. Housing market, if that now collapses, everybody that's bought a house and is a first-time buyer in the last few years has got a very high mortgage. So their loan to value on their mortgage is very high. So like 80% maybe. So if you've got 100 grand house, you haven't, because you can't afford anything for 100 grand in the UK. But if there was a 100 grand house, you would have to put £20,000 deposit down on that house. That house, if the housing market collapses, could drop to 60,000, meaning that you actually owe more money than your property's worth. So the bank can't repossess your property because it can't get the money back. So the banking system has to be very careful that it doesn't cause a housing price collapse, because that will screw the banking system. The banking system controls this all. So it's such a fine balancing act, and I understand why they do it, but it really doesn't help this. This will start to slow and potentially go back the wrong way. And then you're in a position where, oh my God, we're at 5.5%, and this is actually not coming down. Then what do you do? Well, put it up. But this is where we got to back in the sort of 70s and stuff. In the 80s in the UK, we were at 15%. Stupid rates. Yeah. You couldn't get a mortgage now. If I had to remortgage at 15%, I would have to sell my house. I couldn't do it. And I'm not poor, but, I'm not going to pay £5,000 a month for a mortgage. I'd have to trade the crap out of this. But, it just can't happen. So there's, this is why we in the UK have specifically been saying this has been way too slow. We've had the highest inflation rate in the developed world for years. We were above 10% months ago, and they crept this up by 0.25% and then went, actually, we'll pause it for a bit. Like, no. You need to put your foot on the gas. They haven't done it. So this is why we're in the mess we're in. Banks have been a bit too slow to react. But then again, we've never come out of a pandemic. We've never had a world war start after coming out of a pandemic, where every single country has bankrupted itself by paying everybody for not working. And the stock market has rallied while all the stock prices have been coming down. And not all the profit has been coming down in businesses and the stock prices go up. It's just a complete mess, everything. But what do? Nothing you can do. Real estate, commercial, residential problems. The banks were complicit in mortgage fraud, money laundering, etc. Blimey. Would be extremely fragile if people defaulted on mortgages, both residential and commercial. Yeah. This is why you need a resilient banking system. Because banks run the world, basically. So if they're not very good, if you haven't got a resilient banking system that's resilient to lots of different conditions, things go wrong. Size, exposure, spacing, as Diamond's just said, yeah. So size is a little bit too big. Spacing is a little bit too tight. Exposure I'm not worried about because my risk is actually less than half of what it should be. So therefore, I'm not worried about exposure on this account, but yes, exposure. Those are the three things that kill you if you're position trading. You do them wrong. Mohammed, when you took your next position, approximately how many pips when you in drawdown? I have an account 300k funded. Pips. Muzamil, you're talking swear words to me. Pips. We don't talk about pips. Percentage of ADR. Yeah. So my positions are minimum 3/4 of an ADR apart. 3/4 of an ADR is going to be completely different on every instrument in pips. Yeah. So look at ADR. 3/4 of an ADR on the Aussie dollar CAD is going to be completely different to 3/4 of an ADR on the pound odd. Pound odd ADR is 160. Aussie dollar CAD is 78. Yeah, double. So don't talk pips, talk percentage of ADR. And my percentage of ADR minimum is 0.75, so 75%. So when the price is pushed up and I've bought it here, I'm looking for it to go up and it comes down by 3/4 of an ADR. When I get the next reversal alert, whether it be there, or wherever it be, that's where my next entry is. Those ones are too close. Like I said, half an ADR is 37. That's 47. That's 42. So that's just over half an ADR. That's just over half an ADR. So from there, 3/4 of an ADR would be something around about 65. So should have had an entry somewhere around there. And then the next entry should be somewhere around there. So they're just a little bit too tight, a little bit too close together. Nice moves on the FTSE this morning. Well, that will be going with the DAX probably. So I would imagine it's gone up. I haven't got the FTSE here at the moment. So we are holding on the DAX. We've just put propulsion gap in. I'll take it. So my first TP basically is previous day's high, bang on. That's a 2R. See if we can get there, but it's not. Struggling a bit this morning. There's a steep hill in Derbyshire called the Struggle. Okay. That's a bit random. What was I talking about? Something to do with struggling? Oh, this is struggling, yeah. Buy the rumour, sell the news, yeah. Could a problem with the bad economic news talked about all week in China? Yeah, well, the problem with the Australian dollar as well, obviously, is that it does rely on China for a lot of its exports. So there was an issue with China in lockdown where it just wasn't buying anything from anywhere, and that really hurt the Australian economy. So China's economy does have a big impact on the Australian dollar as well, from an import-export perspective. There are so many things that that can impact currency movement. You can't worry about them all. If you worry about them all, let the banks worry about them all. And if you want to know what the banks are doing, you just follow the COT report, because the COT report tells you what the banks are doing. At the moment, they're shorting the Australian dollar. Yep. That doesn't mean the Australia is going to only go down, obviously. It's going to go up. If it has good news, it's going to pop. But it means overall, it's probably not going to pop far before it drops. New Zealand dollar, they're neutral on it. So, let them worry about all the economics and tell us what positions they're taking. Because if you look into everything, you basically have to become an economist. And I can't be asked. Not enough to do. Do you think the US might be facing a repetition of the 2008 housing sector crash? Could be. I mean, everybody could be. It all depends what happens with interest rates and inflation. And whether or not the government's put some kind of bailout. We've since COVID, in the UK specifically, we've become a bailout economy, right? We are now used to, oh, we can't go to work. Can you pay us? Yeah. Oh, this has happened. Can you pay us? Yeah. We've become that sort of economy now in the UK, whereas everything that goes wrong, we expect the government to pay us. Oh, electricity bills are going up too much. Can you stop them going up, please? And can you pay the rest of it for us? Yeah, all right, whatever. Yeah, governments can't do that, and banks can't do that for a sustained period of time. They go bankrupt. Banks are businesses. Governments are businesses. They have a bank balance. They have loans. They have interest payments. Same as everybody else in the world. Yeah, they can't keep spending money endlessly. They have to cap it. So the next thing that is on the news at the moment is if the mortgages keep going up and house prices keep going down and interest rates keep going up, is the government going to bail us out and pay our mortgages for us? Impossible. Absolutely impossible. The biggest purchase everybody ever makes in their life is a house. Yeah, minimum $250,000, 350 grand, something like that. You're looking to spend if you want to buy a house in the UK. Government's not going to just suddenly go, oh, all right, here you go. I'll give you half. It's not going to happen. So I think we're just scratching the surface of what this spiral is becoming at the moment. And I don't think there's a lot we can do about it. There's all this talk of we're not going to have recessions. Maybe not now, maybe not next year, but this thing is not slowing down. Interest rates are still going up. Inflation is starting to curve, but it's starting to curve. It's not coming down at a rate of knots. And I don't feel particularly much poorer personally. A lot of people do, I know, but I've noticed the fact that all the food has gone up ridiculously. The fact that Russia is now going to blow anybody out of the water in the Black Sea that tries to import or export grain from Ukraine is not going to help food prices. They're going to go up further. Still got all the problem with energy. So I think it's all, as Frank has just read your comment, it's a slow motion train wreck. That's a really good description of it. I just feel like we've only just really hit the wall. The rest of the carriages have not crumpled yet. I think there's a lot of pain still to come. And these markets, basically, this is why this is such a beautiful job. It's recession-proof. I don't care whether that goes up or down. I don't care whether inflation goes up or down. As long as I know what the markets are potentially going to do when it happens, you can make money, yeah? Traders make money regardless of what happens. Housing prices crash, who cares? Make money. Yeah. War breaks out, make money. We can make money anytime. As long as these things that we're looking at on here move up and down, we can make money. We're recession-proof. You just have to be aware of what potentially could happen to the markets during whatever is going to happen. So you have to look at history for clues and just be careful, basically. But at the end of the day, it doesn't matter, does it? This job is totally recession-proof. We make more money in volatility. Yeah, if the markets get more volatile because the world's in a mess, this makes us more money. Yeah, if the DAX suddenly, when it does its opening range breakouts, does 20 Rs instead of 10 Rs, I don't care. I'll be disappointed when it goes back to 10R. So as long as you can pay yourself, that's the important thing. Can you look at oil again? Missed it. So yeah, looking at oil, basically forecasts are $95 a barrel. We were told in December, crikey, that seems like a long way away. We were told in December that they were reducing the target from 107 down to 95. They, I mean Goldman Sachs, the big institutions. We basically got 6 months of sideways, more bearish than bullish price action. So we're now in July. That's the target still, and we haven't got anywhere near it yet. This is the first sustained rally we've had, and the first pullback that looks like potentially we may get a run on that high, at least. So we didn't get 38 retracement though. 38 retracement is in this propulsion gap. Yeah. So all we've done is we've tapped back into that monthly high. And it was obviously a previous resistance, broke it, now it's a support. So the fact this has put a lower high in, I'm not particularly worried about at the moment. If it puts a lower low in, then it becomes a little bit more of a confusion. So I think a break today might start a run. So you want to be super aggressive, put your stop under there. If you want to be a little bit more conservative, put your stop somewhere under there. Go for it. I don't trade oil as a position trader. I stop trade it, stop loss trade it. So it's not the sort of instrument I want to get into long-term positions on, because too many things can happen. If Ukraine accidentally shoot a missile into the middle of Russia, accidentally, or Russia accidentally shoot a missile into Poland, for example, NATO is going to get involved. The oil price is going to go through the roof faster than you've seen. Yeah. It'll do this. Yeah, so that's the Ukraine war kicking off. Yeah, if World War III kicks off, i.e. NATO get involved, going up. Yeah. Every military vehicle needs petrol. Petrol is refined from oil. Oil will become hideously expensive because there is only a limited supply of it, and everybody in the entire Europe area, and probably the US, where everybody in NATO basically, is suddenly going to want more of it. Can't manufacture it that fast, so prices will rocket. That is, you know, I'm saying, hopefully it doesn't happen. But I think the market, I think this is what the market's expected. I think the market maybe back in December was expecting the war to kick off a little bit quicker, which hasn't happened. So maybe that was it. I don't know. Okay, DAX is off. Well done, DAX, today. Impressed. Didn't expect you to go that far, but well done. Pat on the back for the DAX. US Chapter 11 bankruptcy filings jumped 68% in the first half of 2023. Wow. See, these are the figures you don't hear about, what's going on under the hood. They dumb all this stuff down. You don't get a lot of this released, do you? Not into the mainstream media. It's like, we don't want to know about this stuff. Homelessness going up by 25% month on month. We don't want to know about that. All the bad stuff. Some famous actor is going to court because he was caught touching up men. Yeah, put that right at the front of the news. Don't you think quantitative easing has impacted inflation? Printing money? Printing money is the worst thing you can do. It's a way of... Oh, we'll worry about that later. When it comes back, it bites you in the arse. Ask the US. That's what they do. They print money as much as possible. The more of it you print, the less it basically is worth. Yeah, it's a supply and demand thing. You continuously print money to bail yourself out, the value of your currency continuously will drop. And then when you get an economic issue like we've got at the moment, you've dug yourself into a... This is what's happened with Japan. Japan's in the same problem. This is why they can't put their interest rates up. It creates a mess, printing money. There's a thing called M2 money supply, and it's one of the leading fundamental drivers that the banks and institutions keep track of. An M2 money supply is basically... there you go, look. printing money, right? So this is the amount of money in circulation, right? You can do this forever, basically, but what it does is it devalues. And look at what's happening at the moment. M2, they're trying to take it out. They had to print more of it as COVID happened, and it escalated. They've got to get rid of this as fast as they can, because otherwise it's just going to disappear. The value of the currency disappears. If there's too much money in circulation, and you're trying to stop people spending, printing money is not going to stop people spending. Inflation is just going to keep going. So they have to get on control of this as well. So this is what I mean. You can go into economics. I've not got an economics degree. I've spent my life learning all of this stuff. But if you go too much into the details of it, you will give yourself paralysis, basically, by over-analysis of stuff. You'll go, oh, right, well, the interest rates are going up, which means inflation should start to come down. But M2 money supply is going up. Therefore, this will cause that. And all of a sudden, you just tie yourself up in knots and you never trade anything. So I took a conscious decision to get out of this, trying to go down the route of being overly complex on this stuff. If you want to learn about this stuff, there's a course by Anton Creel, who is an not sure which bank he used to work for, but he used to work for one of the big banks in the UK. He does an amazing course on fundamental analysis, but it's granular, right? You will come out of it mind blown with spreadsheets coming out of your backside. And he's heavily into fundamentals, which is what the banks are doing. What I show you here is a very, very dumbed down version of what Anton does. Anton will have 30 or 40 columns in this. And what I found was it doesn't matter what the fundamentals say if you're trading short term. If you're a long-term investor, you want to be following COT. Yeah. Long term, you want to be selling the Australian dollar, right? So if you go and look at the Aussie against the US. Long term, you want to be selling the Australian dollar against the US dollar. And all these things in COT should be crossed against the US dollar. This is Anton. We're going to get in here and we're going to get out here with $25 million of profit. On the way, I will be in, out, making loads and loads of money because I'm trading intraday movement. I'm trading the 4-hour and the hourly swings of price. I'm following the bank's movements intraday to get in and out of the market. So I found that going too far into fundamentals means that you will overanalyze everything and you will talk yourself out of taking this short here or a long somewhere here. Got 2 longs, yeah? 3 longs there. So that long there, that long there. Yeah, you'll talk yourself out of taking that long. There's another long there, yeah? Because the fundamentals on a granular scale say you shouldn't be buying the Australian dollar. But these guys have been selling the crap out of the Australian dollar, right? They've got to take profit on that move. And I'm looking to get in and out within days. So on a granular scale, as I say, everything's fractured in the markets. Yes, it's going to come down long term, but for it to get from A to B, it doesn't go in a straight line. It goes like that. There's nothing wrong with buying it when you've identified that the market have just taken profit or entered a large number of positions, because they will scale out on the way as well. So you can go into it in so much detail that you just basically stop yourself taking trades. So you just got to be a bit careful with going into it. But that's how I learned about M2 money supply and all sorts of stuff. If you can do his, I mean, it costs you thousands to do his course. But if you really want to know how the market moves and how the banks and institutions work, Anton's your man. He's very, very, very good. It's not for me. It's too long term. I want to be in and out and I want to find ways of making money on shorter periods. I don't want to be going in and holding for days and weeks in profit. What does everybody struggle with? Yeah. TPs, right? You get into a position, it goes your way, your TP's up there, you see a bear candle go in, and you go, oh, I'll take it, right? Imagine trying to hold something, you get in accurately. Imagine trying to hold something for 3 weeks while the market is constantly doing that every day. Every other day, it's pushing against you. Nerves of steel you've got to have to be able to be a long-term swing trader like that. It's not for me at all. Some people, fine. Yeah, I can't do it. I can't hold that long. I want money in my bank. Yeah, if I see P&L, I've got green in my P&L. I want it. Yeah, I'm struggling like hell not to stick that $400 over there. I'm going out the weekend. You know, it's like different mindset. Did you do Swiss yen? Yes, that's 4-hour RSI extension. I don't know about the Swiss yen. I'm steering clear at the moment. It's not set up, so I'm not in it. So there was a very close entry yesterday, which could have been taken there. Didn't quite get extended. It's not quite got enough for me, and I've got other longs on the yen, against the yen at the moment. So the logical thing for this to do is obviously pull back when we get some Swiss franc weakness into that resistance. I don't know whether the yen's going to power up next week. Next Friday, we'll find out what the yen's doing. So, how do you load 2 or 3 charts at the same time on your screen? How do you mean? Just open them. Open a new chart. Open as many as you like. No limit. CAD yen. Got out of CAD yen yesterday. Nice, easy in, out, done. Again, this yen and the Canadian dollar drop. We've been waiting for that move for ages, as you can see. Got out of my shorts after weeks. And yeah, I don't know. It's not extended. Everything I do, as you know, is based on RSI. Aussie dollar Swiss. Nice. Hopefully that Swiss franc weakness. Yes, it is. Okay, Swiss franc is starting to weaken a little bit. So Aussie dollar Swiss ADR. It's on its way to TP. So, I mean, propulsion gaps to the upside, targets still, potentially still weakness on this yen. And if we get decent news on the US dollar this afternoon, CAD yen's going up as well. But everything I do is based off of RSI, relative strength of the currencies. So there isn't any in either direction at the moment. So I'm flat. Opinion on gold. Oh, that took a long time to get mentioned this morning, didn't it? DAX is approaching TP. That's 1.5%. I'm just closing one. Break even second. This is more than I was expecting off the DAX this morning. So I'm just going to close one out and bank 1.5% just to get myself in profit. My TP was there. We are very close to it. I'm worried about the speed of this morning and just the pure amount of selling we got yesterday. I just get the feeling at any moment you're going to find a candle go like that and then this thing will just unravel. And I'm so close to TP off of that peak. What I don't want to do is the thing unravel. It just doesn't make sense to not bank it. As Tom Hurgard would say sometimes, don't be a dick for a tick. Bank it. So let the second one run, obviously, and see what we get. But gold. So obviously this is going to move this afternoon off of the US dollar news. So we tapped into yesterday's high this morning and rejected. US dollar seems like it wants to go at the moment. It keeps kind of spluttering and almost as if we're about to get a pop on it. So you'd be looking obviously for it to come back down again, but we're literally pushing, accumulating, pushing, accumulating, pushing, accumulating at the moment. So no idea. It's not extended enough for me to take a trade. I don't trade gold at all anyway. But you have just tapped into that previous high. Yeah. So this previous balance here, we got back to it, shot down. We've used it as resistance multiple times. We hit it again, rejected. We've just hit it again and are rejecting. So potentially this is where we're going to start to see that US dollar strength coming through. We need the Swiss franc to pull its foot off the gas. We need some positive news on the US dollar for that to happen. So right now, it looks like a nice short pullback into here. If it wants to continue down the US dollar, obviously we'll pull back and then we'll rally. But right now I'll be looking for shorts. But this afternoon, you will find out, because when the unemployment claims come out, that will either pump or dump. Don't know. Franco, oops, sorry, missile fired. Thought that button was super wash cycle. Who's that? President Biden? I love Biden, but seriously, put someone in charge that can walk and talk. He sat down with our Prime Minister, Rishi Sunak. And first of all, he called him Richie or Rashid. He called him Rashid. Yeah. If you're going to meet the leader of one of your greatest allies, at least get their name right. And then he sat down across from him with cue cards. So, what's your stance on AI? Yeah. He's doddery, isn't he? You need to put someone in charge of your, not Donald Trump, put someone in charge of your country that seriously can run it. I know that they don't run it. It's all run behind them and, you know, they're like a puppet, aren't they? But seriously, put someone in with a bit of charisma in front. My opinion. Man, I'm behind the stream. I just listened to what you said about GB, pandemic and all. You couldn't be more right. Yeah. Michael, I'm an in and out kind of guy. Yeah. That's good. The ladies won't think so, but waiting for a comment there from the ladies. I'm desperate to bank some money. I don't know what to bank. I don't trade gold now. The only reason, there's nothing wrong with trading gold. Gold is just another US dollar cross. Yeah. So you look at gold is going up. You look at euro US dollar going up. You look at the pound US dollar until yesterday was going up. You look at the New Zealand dollar US dollar going up. Yeah. It's just a US dollar cross. So if you trade it, you just need to be aware of what the US dollar is doing. It has got its own entity, obviously gold, and it will move on its own accord. But at the end of the day, it is priced in dollars and it is crossed with the US dollar. So it is heavily affected by the US dollar movement. If you get a massive rally in the US dollar, the gold price will come down. If you get a massive drop in the US dollar, the gold price will go up. As a position trader, I identified that gold was losing me money month on month, quarter on quarter, year on year, and it just wasn't working. So I've eliminated it from my portfolio because I get into too many squeezes and it costs me too much money when I get it wrong. When I get it right, it's beautiful. But when I get it wrong, it's painful. Not so much now, though. If you look at gold now, look at what gold has been doing. Basically, not so much this. Well, I suppose it is really this year, isn't it? Yeah, it's not too bad. It's up and down all over the place. It's given you a lot of opportunities to get in and out without any problems, really. So RSI extensions are working fine. Yeah, got RSI extension there. That would have been a bit of a squeeze up to there, and you'd have been out on that. Yeah, there. Nice out. There. Nice in. If you weren't out on that, you were on that. Yeah. So at the moment, this year, if I was position trading gold, I think I'd have made a lot of money out of it. The problem is, in previous years, it's these erratic movements. So that's the Ukraine war kicking off there. It's these erratic movements previously that have always killed me. It just does this for no reason, and it's not based on US dollar movement. You get these really fast drop squeezes. And the problem with gold is when it moves fast, it moves a long way in one go. And then it will do something like that and carry on. The problem is if you've gone long there, you won't get a position on for maybe 200 ADR. Because your positions are too far spaced apart, the retracements that you get never get back to break even. It's one of those instruments. It's not so much the movement that it makes. It's the way that it makes the movement is what makes it difficult to position trade, which is what I was saying about the, we've looked at this morning, the, is it the pound Swiss? Yeah, that one. So the pound Swiss, yeah. So it's these big, fast, like 200 ADR sustained moves where you can't get a position on. You get a position on, and then the next one you get on is like 1.5, 2 ADR apart. It just makes it hard because your average is so far away, normally beyond an ADR. So when you take one position and a two position, it's got to move at least an ADR back just to get to break even. Normally that would give us a profit, wouldn't it? That's the problem with gold. It just moves too much distance when it goes. But have you noticed Bloomberg changed its screens on live TV, showing more Forex news and interviews? Seem they're finally getting hip. Maybe, no. I haven't watched Bloomberg for actually probably about 6 weeks or so. I catch it every now and again because it's on so late at night. The market wrap basically is what I like because they have some really good speakers on the market wrap. And I haven't been up that late, basically. So I haven't watched it. Right. DAX, we are still going. If we get out above this previous day's high, and we start to break these levels here, I will probably start to trail the DAX. So looking at that candle there at the moment, we're looking at somewhere in the region of 18 points. So I'll probably put something like a 15, 20 point trailer on it if we get out above this level. So this was my initial TP. TP2 is 5R, which is well above yesterday's high. So this thing hasn't had a breather yet, and we are starting now to accumulate. Look. Yeah, so for the last 15 minutes, we haven't made any progress. So the market's slowing down. So I'll be watching this now, potentially anticipating a pullback. So if we can get another little rally up above these levels, it's probably worth putting a trailer on it and then just wait for that first batch of sellers to come in to get you out. But we are still bullish at the moment. If you want to trail it, obviously that's an obvious trailer spot. And then wait for it to push up, pull back. And then if it pushes again, just move your stop up basically and use price action. But I wasn't expecting it to actually get this move. We've got a long way to go to ADR. Still 95 points, half an ADR basically, of movement left potentially before we get anywhere near that yesterday's high level. But it's more likely to do it like that if it's going to get there. So, you know, there's no point. If you think it's going to get there, obviously you leave it where it is. But it's 3% I can bank right now. And I'd much rather trade the US indices at the moment because I know we're going to get some decent movement off the US indices because all these earnings are coming out. So big earnings. We've got reactions today off of all these. So what have they done at the open? Let's have a quick look. So we just had a whipsaw on. Yeah, NASDAQ's coming down, tech. Dow's rallied. Look at the Dow. Dow basically looks the same as the DAX this morning. Look. So real divergence across these indices. You really want to be picking two indices to trade about, or even all three in the US, because the Dow is just going so far out of the way of the NASDAQ and the S&P at the moment. You really want to have the Dow on with something else, because if they both break as they did yesterday beautifully, remember I got on the S&P long yesterday and I got on the Dow short yesterday. Both went okay. Got the DAX yesterday as well. If you catch all three of them in one session, you know, I've had 2 days. I've made 15% in 2 days off the indices because we've got beautiful ORBs, which are just going, you know, half an ADR, 3/4 of an ADR, almost parabolic at the open. So they're all going in different directions as well at the moment. So you need to be getting on all of them, but just keep those stops a little bit wider at the minute because we are getting whippies at the open, because obviously there's a massive amount of stock purchasing and selling going in that first 5 minutes. So you get huge volatility, but yeah, really decent opportunities to make money in the indices at the minute. These are the days you make your money, and make sure you stop and take it out. Every trader I turn onto you, they act like they're coming out of a cave, mumbling, no stop loss. Still waiting for your book. Stop stopping your profits. That's a good title. I can't be asked to write a book. It wouldn't sell. It wouldn't sell. There's too much mainstream education teaching you how to do it wrong. It wouldn't sell. I don't think. It's a lot of work writing a book as well. I'll have to have a chat with Tom Hugard because he's just released his, which is brilliant, by the way. Get it if you haven't got it. I'm not an affiliate of Tom's, but that is a brilliant book. He's a very, very, very good trader. But yeah, I couldn't be bothered to write a book. That's exactly how I felt. That's a really good analogy, that coming out of a cave, mumbling no stop loss. I liken it to being in a boxing ring for 5 years of your life, getting beaten to crap, and then suddenly realizing, oh, you need boxing gloves. It's that light bulb moment. I've been putting an order in the market to lose money all the time. Everybody's told you to do it, so you just assume it's what you should do. But then you go and look at the banks and go, why aren't they doing that? Because they make an absolute fortune. Oh, light bulb. Which website are you using to check the earnings? Interactive Investor, ii.co.uk. There is a link. So that basically, that page is the US earnings seasons page, which is updated for earnings. So every quarter we get it gets called lots of things, but the funny fortnight. It's actually more longer than a fortnight. It's pretty much the entire month of July. It's every quarter, basically. It's the quarterly earnings reports. And this is where we find out how everybody's doing. Why it all goes completely mental. Volatility. That's how you make money. Are you risking 2% for each of the 3 indices to get the 15%? 1%. No, sorry, yeah, well, 2%, 2% per index because I'm taking 2 trades, yeah. But and that's why I got caught out. So if you were in here last week, I blew a E8 evaluation that I was doing in the live room because I over leveraged on the risk. So I didn't. This is the thing. This is the thing with the prop. I didn't over leverage. So the 5% drawdown, basically, I took 2% long on the NASDAQ. I took 2% long on the Dow. Yeah. I flipped short, took 2% short. So I'm hedged at 2%. Same happened on the Dow. So I was hedged at 2%. The S&P, I went 2% long. 6% risk. These two were locked in and hedged. This one went into drawdown. That blew the account. What happened was that hedged, and all 3 of the positions won, would have won, and made way over 10% profit. Actually, no, probably maybe somewhere between 7 to 8% profit on the day. But if I'd have gone in with 1% on each of these, I'd have been fine. But this is how you do. This is the thing with prop. There are a million ways to pass prop. The super aggressive way I love because I can be done. E8, right? I've made 15% in 2 days. Yeah. Day 1, passed. Day 2, passed. Day 3, funded. Yeah. Or I could have halved the risk and taken 2 days to pass stage 1 and then maybe have a bad run and blow stage 2. See, this is what I keep saying. Whether you pass or fail is totally dependent on the day that you start trading. The risk that you use is your throttle, if you like, the speed at which you will pass or fail. So if you go with a low risk across 3 pairs, you'll survive longer. But whether you need the account quickly or not is entirely up to you. At the moment, I've got 2 fundeds running. I've got a futures account, which is just over $1.5 away from getting funded. So I don't really care whether I blow it or not because it doesn't affect me. It cost me $500. No, it didn't. It goes on special offer. That's why I bought it. It cost me like $400. And I fucked it up, but it doesn't matter. That's your decision to make. You are not in control of whether you pass or fail. You're in control of the speed at which you do that. The market controls whether or not you do it because it controls the movement of the price. So, this is what I keep saying. There's my TP hit. That's where I got out. The difference between that and that is $500. In the grand scheme of things, I'd rather make $1,500 than make $2K potentially. Yeah, this is the thing with prop trading. You have to look at what you've made previously, what you've got currently running, what you've drawn out. There's so many factors that go into decision making as to what you do with each account. I always get asked, what's the best settings for prop? What's the best risk for prop? I don't know. It's whatever it is that passes when you start that evaluation. I don't know what you're going to do when those trades fly, or I don't know what you're going to do when it goes whippy and you have a day's loss. Are you going to then try and trade the afternoon session, or are you not? Are you going to take the pre-market or the post-market? There's too many variables. Trading is all about getting in with a risk-reward profile and either making money or not making money, depending on the market, and sticking to that risk-reward profile if you're using a stop loss. And you have to in prop because you've got a tiny, tiny window they give you of making money, which is 5%. So this account right now is high risk and it's doing fantastic. I will reduce risk down. But while the markets are making money, this is one of the things actually Tom says in his book. And this is one of the things that everybody does wrong when they're scalping, specifically when they're scalping. When you're swing trading or position trading, you've got a lot more time to react. But when you've got the market going your way. You push the market. What people do all the time, and I get asked this about products that I produce, is like, can you have something that takes partial profit? Why would you take a partial profit when something is pushing in the direction you're going? You should be adding to it. You've got it right. How many times do you get it wrong? Right? When you get it right, you've got it right. You thought it was going to go up there and go up there. Stick some more money into it. Make more money out of it. Yeah, it's just counterintuitive to do it, pressing a long position. But that's what traders do. If you watch that video that I said about the other day, flawed. Again, there's something that Tom put out there. I've seen it so many times. It's been out for probably, I don't know, 10, 15 years. It's a really old video. But, they were doing it in the pits, like, buy this, buy this, buy this. And it would go up and they go, buy more, buy more, buy more. And it would go up more and they want to buy more. And that's what you do. If something is going up and you're buying it, you buy more of it because you are doubling your profit, tripling your profit, quadrupling your profit. Yeah. If you take a partial off, what you're doing is you're removing half of your possibility of making money. If you put a trailing stop in there, you're removing the possibility of making money because every pullback stops you out. You put an order in there that says, get me out the market will get you out the market. And then it will rally off in the way that you're expecting it to go. Break even stops. You put a stop in at break even, the chances are, because market price action does that, market structure does that. If you put a break even stop in the market, the chances are it will break you even. That's what you told it to do. You put an order in there to tell you to break even. So it broke you even. You put a break even in when you've got so far that it's so unlikely it's going to come back there. And if this pulls back, put another entry above that high and get the next leg of it. Looks like we're going to hit ADR. Yeah, don't stop and take profit. This is, when you're in prop as well, this is something you need to press these winners because it's so hard to get a position on. In futures, what I tend to do is I take a single contract, and if that first candle of my trade works, I'll add a second contract. And then if that next contract candle works, I will wait for it to get into profit and wait for a little bit of a pullback. And then I'll add another contract, trying to get a 3 contract short in this case on. Yeah, because a 3 contract short going down a quarter of an ADR makes me $1,500. That's all I need, one trade. I need to get one trade on. But with one little contract, you're going to find it very hard to make it. You've got to be able to add into those trades that start to work. And if I can get 3 days in a row where I just get one trade on, I made over $1,000 yesterday. I had a choppy morning. And then in the afternoon, I caught the break. Bang. I was like, dum, 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 $700. Literally within 10 minutes. That's what you've got to be able to sort of adapt to. And this is why I keep saying, the market reverse alerts EA is brilliant. The opening range breakout EA is brilliant. If you want to set them on autopilot, they're fantastic. If you want to watch what's going on and pay attention, you're going to make a hell of a lot more money because you're going to see stuff happening that you think, that doesn't look good. It hits this dotted line and bounces off of it. It pushes up, hits the dotted line and bounces off of it. Pushes up, hits the dotted line and bounces off of it. What's happening? The sellers are not letting the buyers buy any more stocks. What do you think is going to happen? The buyers are probably going to go, oh, well, that's the end of it. We'll take our profit. It's going to come back down again. If you're watching and you see it happen, you will take $2,500 profit there. The EA will take a break even. Yeah. You see it pull down and you see a huge wick, a bullish engulfing, another huge wick. The buyers are taking control. I'm going to go over another quick long there and add one to my position. You're going to make twice as much money on that next leg than you would have if you just let the EA do it. Well, I built the Price Action Toolkit so you can scalp this sort of stuff. You've got to be able to adapt. So what I risk is based on how things are going. And if things are going well, as they are at the moment, I'll milk it. If I'd have had a bad loss this morning, I would possibly reduce risk this afternoon, because I won't be able to afford too much drawdown, basically. I've spent 8 years to find out perfect stop loss and to find out the perfect stop loss and lost thousands. Learning for you. I'm straight up. I'm up straight in 4 weeks. It's not just removing the stop loss, though. It's removing the risk. It's reducing the risk down to a level that you can remove the stop loss. That's the key. Yeah, so not taking massive risks. The only way you will understand how this market works is by being in this market. So the best thing you can do is just set up a demo account. I mean, it's not, I don't like trading demo because it's not real money and you don't necessarily make real decisions in the same way on it. But if you just get into a trade, press the button and then wait and see what happens, you will see the market over a period of days or weeks do stuff. And you will suddenly realize if it was in a range and you hit the buy button there, you had 1, 2, 3, 4, 5, 6 opportunities to get out of that position if you hadn't used a stop loss. If you'd used a stop loss, you may well have been stopped out 3 times and maybe got 1, 2R. Not made any money. But removing the thing that stops you making profit is the only way to make money in this market, because it's completely random and manipulated by the banks. And you're unable to see what's going to happen. So you have to get in and hope. And some of the guys in that flawed video, they liken this to gambling. It is gambling. I'm pressing right now the sell button because I want it to go down. If it doesn't go down, why should I take a loss? Because if it doesn't go down now, after moving that far, and it goes up, it's going to come back down again because that's what it's been doing. Go back on the chart. As long as you want to go back on the chart. All this thing does, literally all it does, is go up and down. Why put an order in to lose money when you know it's going to go up and down? And if it does go up and down, how can you not make money? By putting an order in there to give it to your broker. That's the only thing. That's the only reason everybody in this industry trying to do this at home is losing money, because they're trying to lose money by putting an order in up here that says, if it goes there, lose me money. Reduce it down to a small enough amount that if it goes up to there, you're going to have 0.25% drawdown on your account. Next time it comes down, even if you close it out at 0.05% in profit, you're not losing money. Your job is to make money, not to lose money, right? You put an order in the market to lose you money. You put an order in the market to make you money, fine. But why would you put an order in to lose you money? If your only job is to make money, why not just use that one? Because it goes into drawdown. Right, so if it's going to go into drawdown, manage your risk. Reduce it down to a level so that if it goes against you really badly, it doesn't matter. That's the only thing. That's what everyone gets wrong. They over leverage. Like somebody said in here a couple of weeks ago, didn't they? I didn't chastise them for it, but I kind of reinforced, because they said basically, I'm looking forward to increasing my risk. No. If you're profitable, why would you want to increase your risk? Keep your risk exactly where it is. If you want to make more money, increase your account size. If you're trading with £10,000 now and you're making money and you double your risk, if you get into a squeeze, the chances are you're going to get hurt. If you go and borrow another 10 grand or find another 10 grand or whatever you want to do to get another 10 grand, you're going to double your profit, but do not increase your risk. The risk has to be small because we have no clue where this thing's going. And if we're going to get into drawdown and get it wrong for weeks on end, we need to be able to survive. I keep bringing myself back to this Aussie New Zealand because it is such a fantastic example of a squeeze. I got in there. I couldn't have been wrong. I could not have been more wrong. And I made 1% loss by being wrong for 3 weeks, 4 weeks, a month. I was just wrong. But what did I lose? That. Because the amount of money I'm risking is so infinitesimally small. Yes, it only makes me a small amount of money, but if I can make a small amount of money multiple times a day, 2%, 0.5%, 2.5%, 1%, whatever, it doesn't matter, does it? It all adds up. At the end of the day, your job is to return a profit on your account, not put an order in the market to guarantee a loss. If you're scalping small time frames and you're trying to make money out of micro movement, micro random movement in the markets, yes, you've got to use a stop loss, because the only way to make money out of that move there is to risk a lot of money. It's the only thing you can do, isn't it? Just different, but everybody's trying to trade 5-minute timeframes because this is where it's easier to make money. You can make fortunes. You can lose fortunes. Go out to the hourly timeframes and the 4-hourly timeframes. Everything is slow. Your risk is reduced. Everything is like profitable. Banks don't even look at anything less than the daily time frame. The algorithms do, and the speculative traders on the exchanges do, but banks that are making money long term, not even touching the 4-hour and hourly charts, because you wouldn't. Why would you? Because it's just out. All they're seeing is orders. They know it's orders because they're placing the things. We're trying to make money out of random bank movement. It's just so unbelievably hard. So you've got to be adaptive to what you see. When the thing's going nuts for a few days, you go nuts for a few days. When it starts going whippy for a few days, you pull back for a few days. Take your foot off the gas. It's not going right. It's not going right. You know, it's like walking into a boxing ring with a huge bloke, going round one, having a broken nose, busted lip, broken knuckles, and then going, shall I go on to round two? No. I just need to fix this, and fix this. Step back. If you're getting it wrong, stop. Because if you're getting it wrong now, you're probably going to get it wrong next time and next time and next time. This is where all these strategies, you know, that look amazing like that, they will only do that while the market conditions are conducive to doing that. When the market conditions are not conducive to doing that, they do that. So you get all these EAs that people sell and you look at their statistics and for 2 weeks, they've made an absolute fortune. Everyone goes, oh, that's amazing. As soon as they start trading with it, it does that. And they're like, why did that happen? Well, because we were in a bull market and now we're in a bear market. And that only works in a bull market. If you only make money in breakouts and for 2 days, the thing's just on range bound, stop. It's not working. Wait for the market. But the trouble is with breakout strategies, obviously, you don't know when it's going to happen. So you have to be on top of this thing. It's not something you can just, I don't think, set running and forget about it. You can, I know, and I've proved it long term. You can. But if you want to make more money, you've got to do this yourself. You've got to figure it out and watch the market. The only way you learn is by seeing. I've taken to prop trading and like it, doing okay. Learn the ropes fast. Yep, you do learn the ropes fast, Franco, in prop trading because they kick you in the arse very quickly. I think I probably blew, I don't know, it's double figures. Before I got funded, I think it was double figures. Prop evaluations before I figured it out. Well, I didn't figure it out, but you figure out that it's not figure outable. You just got to stagger your risk. You don't know what's going to work and when. You just need to make sure you're in it when it does. Do you trade the same on your funded account? Yeah, exactly the same. Aggressive and not aggressive. The funded accounts are a maths equation. Literally, it's a business. It's a maths equation. You put in X, and as long as you get Y out, you win. That's all it is. And the beauty of funded accounts is you don't need a lot. That pays the mortgage. Yeah. So if I get a good couple of day run, stop, wait for payday, pull it out. Meet their conditions if your firm has got a you must trade for a minimum of 5 days condition. You have to do that. You got to wait for a period of time if you have to be flat. There's all sorts of rules to get to the payments, but stop when you've got that money there because it can go as easily as it comes. So, you know, if you think you're going to get a decent move, and I honestly thought it was going to be the other way today. Yeah. But what do I know? When can I read the future? Never. So, you know, you just got to, it's repetition. It's all repetition. Yeah. So when you're trading any charts, and one of my mentors drummed into me the fact that you need 10,000 hours in front of these things to understand them, because you need to burn this onto your eyeballs. It becomes second nature. It becomes a case of, I've seen this so many times. I know what's going to happen because I've seen it. You've seen everything. That's what you've got to do. You've got to spend chart time. And people think that they can come into this industry and suddenly go and buy an EA or an indicator and read a book and do this. Everybody can be an amazing theorist at things. I know people that teach particle physics that couldn't actually build a reactor, right? They're excellent at retaining knowledge. They're excellent at understanding and explaining, but actually doing is a completely different thing, and watching things play out. Yeah. And this is where, I've said it a few times before. If ever you're in a squeeze, the best thing you can do is zoom out on your chart and look at what happened last time. Go and look at other pairs. When have we had this situation before? What happened? And find out what the best and the worst scenarios are. Swiss franc increasing their interest rates unexpectedly. Has it ever happened before? Yes. If they were to do that again, what happened last time? That. Okay, I'm long. Close it. Yeah, that's what happened last time. Assume the worst and take the loss. I've been in a squeeze with 7 positions on where it's pushed up for 3 weeks solid in one direction. What happened afterwards? We retraced 75% of the move. Oh, okay. Yeah. Doesn't mean I'm not going to get out early and I'm not going to get it wrong. But what it means is I've got confidence in it happening again because I've seen it happening over and over and over again. The only way you're going to do that is by studying this thing in front of you over and over and over again and seeing the situations play out over and over and over again. The yen intervention thing that I went on about for weeks when we were approaching 145 on the US dollar, I said 145 on the US dollar. It's where it happened last time. Yeah. It's just, I've seen it happen over and over again. You just know it's coming. You just do. So I was short. And I didn't want to take longs because I knew that it was either going to be a Japanese intervention or the market was going to listen. So, you've got to put the time in. There's no shortcuts in this. And, I've been in it longer than I took longer than I should have to become profitable because I didn't know what I knew. And I learned all the wrong stuff. This is why I say to people, don't buy courses. Don't go out there and buy courses. They all teach you the same thing. Yeah. The market moves up, the market moves down. It's completely random and it moves and turns in different places every time. You cannot predict it. If you can't predict it, stop trying to buy an indicator or a course or a strategy that is going to predict the future. You can't do it. Get in the market, wait for it to come back in your direction and get out. That's all you can do. Unless you're going to scalp, and then you need to understand price action. You need to learn candlesticks. What do these mean? What's going on under the hood? You need to understand the market. Yeah, if you want to become a mechanic, you need to understand how the engine works. If you don't understand how the engine works that makes this happen, you're never going to be able to fix it. Time. Chart time, watching it, seeing it unfold. We've been trading the opening range breakout in here for probably 3, 4, 5 months now. Getting better and better at it every single day because just seeing it unfold every single day. This thing's going mental. Yeah, I've seen it go parabolic up to ADR without stopping multiple times now. Not getting out because I've seen this go parabolic multiple times to ADR. 610. Got 61 points to go. I don't know if it's going to happen or not, but what I do know is if I've got a shed ton of money sitting there, 2.5 grand, and I've just banked 1.5, my mortgage is done. That's what I know for a fact. So am I going to get out of this position if it starts to pull back? Damn right I am. Should I? I've no idea, but I need to pay the mortgage. So everybody's decision is going to be different. And this is why you can't teach anybody anything in specific in this industry because you've got to figure out what you need to do to make your money in your way. Everything's going to make a different sense to you. Risk management is key. And Tom's aggressive. No fear trading when the iron is hot. Again, yeah, but Tom's been trading for 15 years. Pretty much the same amount of time as I have. And he used to work in a brokerage. He knows what he's talking about. He's a statistical trader. Yeah. He looks at price movement. So does all the big guys out there that you will find that have ever been successful in this industry, they are kind of pattern traders. They've identified a condition in the market that repeats itself over and over again that they can exploit as an edge. My pattern is randomness and bank pullbacks. I know when the market has pushed, extended into one direction, that elastic band is stretched and they will ping back. So if I know they're going to ping back, I know which direction it's going to go next. I can't time it, so I've developed a strategy that doesn't require timing. Other people's strategies are based on candlestick patterns where they identify daily patterns that repeat themselves over and over again in certain markets that they've managed to exploit. Some people are trading candlestick pattern recognition. Some people are trading a system or a strategy which relies on timing and price movement over and over again. But the thing that you'll find with every single one of them is they have a fixed risk, a fixed reward if they're using a stop loss, and they add into positions as they become profitable. Because when they get a winner, they know that they can maximize those winnings. And you can't control the market. So when you add into those winners, you could also take all of that profit back off and lose even more. But the days that you don't will outweigh the ones that you do. And the only reason you know that is because you look at this thing over and over again every day and you see the same thing playing out. And you know for a fact that at some point, one of them is going to work and that's the one that's going to pay you. But there's no mathematical calculation done. It's a feeling, discretionary. And everything on M5 is discretionary because it is just random. You can't predict patterns in a random thing, but you can identify a time that a thing is going to happen. What the thing is going to be, I have no idea, but I know roughly around this time is when they kick it off. And if they're going to kick it off in one direction all day, I want to be on board. That's literally all the opening range breakout strategy in EA does. And you can take the pre-market, the post-market, you can take the 5, the 15, you do what you like with it. But at some point, if that is going to go today, around that time, around that area, you're going to get on it. That's all that the edge is. The edge is not complex. You know, people keep sending me recommendations for increasing the profitability. If you used a moving average on it, you would only go in one direction, in the direction of the trend. That's true. So I'm going to miss all the 3 ADR drops. Well, it won't do that. No, it will do what the hell it likes. It's a stock index. People want to sell a stock, it will go down. If they want to buy it, it will go up. What happened yesterday, and because it's been trending for the last week, doesn't mean it's not going down today. Look at a daily chart. And look at a daily chart of a stock index. Yeah. Just because it went up 4 days on the chart doesn't mean it's going up the next day. And then as that pullback started, it doesn't mean it's going back down again. And because then it looked like it was going to break out, doesn't mean it's going to. It went down. That day, massive sell-off has got nothing to do with that day at all. So if you're using the trend to get in, as people have recommended, yeah, fine. You can get in some of these in the right direction. But when you're going sideways, right, you will just lose every single trade. Right? So where you get these ones, they're all cancelled out by those ones. Yeah, remember that, what I said earlier? You see these lovely P&Ls, which go like that, and then they go like that, and they go like that, and they go like that. Because it works in that market condition. Of course, trend trading works in a trend. But when you're in a range, it hemorrhages cash faster than it made it. And I'm going to miss out on all of these massive, huge ADR hits because you told me to go long. Doesn't make a difference whether it's in a trend now. Trends come to an end. We've been in a bull trend since October. Yeah. Are we still in a bull trend now? Are we in a range? Are we in a bear trend? What are we in? I have no idea. I don't care. Doesn't matter, does it? As long as it goes up or down very, very fast and very hard today, I don't care which way it goes. It doesn't affect me. If I just look for longs and it goes short all day, I will lose all day. You have to flip with the momentum when you're using a stop loss on the 5-minute chart because it is a momentum time frame. It's literally random order execution. If they're executing all the orders long and you try and short this every time there's a down candle, you will just lose your entire bank balance. You've got to flip and go the other way. But you'll only know this if you see it happening over and over again. I took a long yesterday there, didn't I? Stopped out on it, flipped short, got out down there. Only reason being is because I hadn't got a clue which way it was going. That was the short, that was the long entry. Stopped out, flipped short, TP was there. That was 2% profit. I haven't got a clue which way it's going. And the way yesterday was the day before was bull day. Do you know what I mean? It doesn't matter. You're trading random. So, but you've got to see this unfold. You've got to see it with your own eyes. And unfortunately, people don't have time to put them. You haven't got, if you're running a job, you can't do this, can you? So with the greatest will in the world, as much as you want to be a fighter pilot, you've got cross eyes. It's not going to happen. If you work a full-time job and you want to be a full-time trader, it's not going to happen because you can't put in the hours to watch the thing at the times that you need to do it. Just real world, guys. I'm learning a lot listening to you explain when you decide to close early and start trailing stops. Dynamic. Discretionary. This is why everybody tries to sell you a mechanical trading system, because discretion means completely different results. Yeah. So as a discretionary trader in indices, I will get a different result to you. Someone is probably sitting here now taking the ORB. I haven't looked in Telegram this morning, but someone's sitting here now having taken the ORB with the EA today, and they're still in this. I'm out here on position 1, in position 2. Someone's still in position 1 on this because they are watching this thing go up and they have decided that they want to make more money. Their decision is based on what happened yesterday. They made a loss yesterday. I didn't. So I'm aggressive. They made a loss yesterday. So they're being cautious and they want to try and get yesterday's money back. So they're going to let it run. Discretion. If you sell someone a mechanical system, which has a mechanical set of rules, that's great. Everybody will trade exactly the same thing. But a mechanical system is it's got to be based on something that works in all market conditions. There isn't a system that works in all market conditions because the market conditions being different mean that breakout strategies don't work in a range. Trend strategies don't work in a range. Mean reversion doesn't work in a trend. In fact, it does. I've proved it, but that's why I'm a mean reversion trader. But, you still have to use some of your discretion. You have to be the trader. I never sell my EAs and say, go and sit on a beach, drink a Mai Tai, just stick this on a VPS and make a load of money. Use it to trade. But God's sake, watch what's going on because it's your money. Make a decision. I'm sitting here just watching this Aussie dollar Swiss in 0.3% of profit thinking it's rolling over. Take it. Everybody in my body is saying, take it. And I probably will take it in a minute. But the EA will take it here. And if this goes down to there, the EA will get a different result to me because I'm the trader. The EA is a mechanical blunt instrument that hasn't got a clue whether or not this Aussie dollar is going to push today, and neither have I. But it doesn't know that I would like that 400 in my account because I'm going out with the family this weekend. It's going to cost me 300 quid. Yeah, nice. You've got to make these decisions yourself. What if I quit my job? If you quit your job, I liken this to becoming an airline pilot or a brain surgeon. This is a very, 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 very hard thing to make money out of consistently. And it takes a long time to understand how it works and how to make money out of it. If you quit your job, you have got to still pay your bills and live for as long as it takes you to crack this. So if you can right now quit your job and you've got enough money in savings to survive for an entire year paying your bills and living the life as you want to, you could do that, study full-time, trade full-time, and get a good understanding of how this works. Obviously, you're going to need a balance to trade with as well. So you need a minimum of 6 months worth of money available to quit your job to be able to start as a trader. I was told when I was considering going full time that you needed 3 months worth of salary. Yeah. So assume that as soon as you go full time with it, bear in mind your mindset is going to change. Yeah. You might have a fantastic demo account, which has been trading for 3 months and it's been doing absolutely brilliantly. As soon as you put real money in that market and doing that thing that you did for 3 months is imperative to pay the bills, that changes. I was running at one point just under $1 million in funded money. I couldn't hack it, couldn't do it. It's too much. I can't trade that much money. It's too much. And I probably can trade that much money. And if I just shut my eyes and didn't ever look at a P&L or a profit or a percentage or anything, the mindset is the same in theory, isn't it? If I want to make 1% a day, it doesn't matter if I'm trading a 10 grand account or a 100 million account, I make 1% a day. When the numbers are that big, your mindset changes. When you've got to pay the bills with this job, your mindset changes. Things change. There's a switch that goes off and goes, right, I've got to get serious about this. And you will be scared to take a trade. I was, because it's your life on the line. It's really easy to go and turn up to a job. Every month you get a load of money for doing whatever you do, and you might hate your job, but you get a load of money regardless of whether you hate it, love it, or what. During COVID, we got paid for even not turning up to our jobs. I didn't. Yeah. The government was bailing out businesses. It was bailing out everybody. I was sitting there going, what about me? No, you haven't got a job. No, I have got a job. No, you're self-employed. All right, fine. I'll pay myself. That's the mentality you have to get into. So make sure if you're going to quit your job and learn to do this, first of all, you've got a minimum of 2 years trading under your belt. And you've got to be at a point where you've at least consistently profitable on demo. And then make sure you've got at least 3 or 6 months, probably more like 6 months, if better still, 12 months worth of money in the bank. That if you screw it up and it all goes completely wrong, worst case scenario is you can go and say, I've been traveling for a year or 6 months to a new employer and get a job back. Because few people make money out of this. Very few. We know that because we've seen the statistics. We know the statistics. They're published all over every single broker's website, aren't they? Yeah. It says at the top of every website. Axie at the moment, 83.1% of retail investors lose money with them. 80% of people that try this fail. And those 17%, yeah, a lot of those 17% aren't normal retail traders. You know, they're larger organizations. Prop firms, prop desks using the liquidity of Axie. You'll find it's nearer to 5% that should really say something like, I reckon, 90 to 95%. Yeah. 1 in 10 people can do it. Do you want to risk your entire livelihood, family, and everything on being a 1 in 10? Everybody's confident, but real world. I don't sell Lamborghinis. I don't sell trading courses on Lamborghinis. This is the real world. I'm closing this DAX because it's rolling over. Maybe right, maybe wrong, but it's 4K. Just think very, very, very carefully. What would you say is a good minimum starting account balance? Whatever you got. Whatever you can lose. I started with 5. Actually, that's a lie. I started with 2. And I think my first trading account was 2 grand. I lost it. That was with Day Trading Radio. So I lost it, I would say, probably within 2 months. And then I was like, I see. I've got the wrong system. So I changed system in the same market, stocks. And then I went back in with another couple of grand. Or maybe I think it was $1 grand. I can't remember. This was 15 years ago. I think it was about £1,000. I went in with half as much of the money. Lost it. Gone. Right. Okay. I understand now. I'm risking too much. So I'll reduce my risk down. So I'll put more money in. And that's when I went into FX. Totally different market, nothing to do with stocks. So basically I system hopped from a market I'd been learning about into a market I knew nothing about and put double the amount in. £5,000. £7,000 down. Probably a year in. Yeah, that's what happens. That's what we do. So I could afford it. Yeah, luckily. Then I put money on a credit card. And I was like, right, okay, I'm going to crack this time. And I put a bit on a credit card. That's when it all went, right, this is serious now. I'm becoming a gambling addict type scenario. Your mentality changes. That's when I realized that I needed to spend time learning what the hell this thing is, because everybody was selling me a course, a system, a trading room or something. And I was seeing these people making all this money. All these people have been doing this for decades, 10 years, 5 years plus. They were all doing it because they knew what the hell they were doing and they had a huge bank of cash available to do it with. You can't make enough money to live on with £5,000. A £5,000 account. You need, if you can return 10% a month on a £5,000 account, that's good. You're doing well. That's 500 quid. My mortgage at the time, I think, was about £1,300. So if I could have a successful month and be consistent for 3 months in a row, I could just about pay 1 month of mortgage. That's when I realized I need some serious money if I'm going to make money out of this, or I need to massively over leverage and get lucky. So what's the minimum amount you need as a starting balance? What do you need to make a month? If you're going to make 10% a month, then you need to make $4,000 a month. Yeah. You need 400K. $40K, sorry, 400K, 40K. 40K. Realistically, or you go and get funding elsewhere and risk other people's money, prop. But prop will put conditions in to make it hard for you to do it. So you're going to need to do multiple prop and have those lucky runs. And you need a different strategy. The strategy is totally different, right? If you want to be a long-term consistent trader, you, I think, need to be trading the hourly charts or above, and you need to be position trading with a serious amount of money, decent level of capital. And if you want to over leverage on it, it's riskier, but you will make money faster. And then when you've got enough money to actually do it with the proper leverage, you can reduce it down. So you could survive on twice the risk for a couple of months if you're lucky enough not to get into multiple squeezes at once, which is quite probable, but also could happen. You don't want to lose that level of capital, do you? The other option is you go with a strategy like an M5 scalping strategy, but it's incredibly difficult to do, hard work, mentally stressful and draining, which is why you will find traders in that, you know, like I mentioned Tom Hugard a lot because I respect him. He's a fantastic trader and really good educator, teaches it like it is, which is what I like. But he takes months off. He'll take a month off. Why? Because he's shot. He's knackered. Trying to trade aggressively with hundreds of pounds every tick on a 5-minute chart, completely random, knowing that any moment this thing could drop and cost you 5-10 grand. Mentally draining, mentally destroying. I couldn't do it. I can't do it. I can't do that. It's not me. And you've got to find your route as well. I couldn't find my route. Part of the trading journey is trying everything to figure out what clicks, because what clicks with me isn't going to click with you. What clicks with you isn't going to click with the other guy. You might be absolutely made for scalping. You've got the mentality, the concentration. People with ADHD are fantastic scalpers. People with focus problems or people that are autistic, yeah, hugely focused on one thing. Amazing scalping. terrible at holding a position because they get bored and need to do something else. Can't hold something for more than a day. Go, oh, what should I do? I'll press the button again. Over leverage, over trade, over expose because I'm bored. Yeah, you've got to find out what type of person you are to know what type of trading you have to do. So, and that's part of the journey. What time frame is best to trade on? What time frame is best to trade on? I'll flip the question back. Can you spend all day in front of the chart? No, you can't trade M5 or M15, really not the hourly. You need to be trading 4-hour or daily. Why? I want to trade M5. You can't. You're going to work. What are you going to do? Sit at work with your phone under there, constantly looking at your boss, waiting for a 5-minute setup? You can't do it. So scalping's out of the question. There's a part in the bootcamp about what you can do, what timeframes match with what timeframes based on multi-time frame analysis. And it's going to depend on how often you can check your chart. And also H1 and H4 are so much more stable. There's so much to think about. And all this is stuff that you learn by doing. I realized I wasn't a good scalper on the stock market. So I stopped doing it. Then I had to find something else. You have to start again. Every time you try something in this industry, you have to scrap it and start again. After a point, you will realize that you're learning the same thing over and over again. It can't be tamed. It's a random thing. So you're trying to find something to make money out of something that can't have a direction that you can predict. And as soon as you realize that, you suddenly go, aha. And then you switch to either a strategy where you literally just use a risk reward and press a button and figure and you sit there and hope. If 50% of the trades, when you flip that coin, go your favor and you've got a bigger reward than risk, you will win money. That is what risk reward is all about. Or you realize that every time you put an order in the market, it gets taken out because it goes up and down. So if you can't predict the swings and the ups and downs and you remove that order, you suddenly realize that that works as well. That's the conclusion I came to after 15 years. I haven't got a clue. I got a good idea of how this thing moves and I can half time what's going on. I'm doing the same as everybody else that's making money, hoping that Ukraine doesn't get invaded, or hoping we don't have a pandemic, or hoping that there isn't a news event that sends the dollar going completely crazy, because everybody that is making money in this industry is going to go into drawdown or they're going to make a fortune. But you can't control that because you are not in control of the market. There is no controlling it. It's random. So, go and find me a system or a strategy that has worked on past price movement. Fine, I can give you a million EAs that give you profitable results on a back test. None of them will work in the future because what's happened there is never happening again. But similar things will happen. But when you try and put a specific mechanical stop and profit based on what happens there, that mechanical stop and profit will have to be different in the future, which is why you will never replicate a backtest result, which is why anybody that's selling you a mechanical system, because you can't discretionary trade, can't give you something that will work, which is why you system hop, because you think there is one, because nobody's showing you what's actually happening under the hood. These guys selling the mechanical systems and the trading courses aren't showing you their P&Ls every single day with those mechanical systems and trading courses, because if they are making money, and I'm sure a lot of them aren't actually following the mechanical system exactly, because they've got to be able to bend it, because that's a beautiful mechanical setup, but we've got news coming in an hour. Oh, I've taken it. I didn't take that one. Why not? Didn't like the look of it. No. You knew that it wasn't the right time to take it, but everybody that's bought your mechanical system doesn't know that bit because they haven't had that part of education yet, because they've only been trading for 6 months and not 6 years. They've been trading for 6 years. They'd know that they need to know what's going on with the news, which is why I kind of chastise everybody in the Telegram group when they go, why did the US dollar just tank? Because you didn't do the one thing you've got to do every morning without fail and find out what time the market's going to move today. It's going to tank at 1:30. I can guarantee it. 1:30, huge volume comes into the market today, right? And if you come into the Telegram group and say at 1:35, why did the US dollar push today? I'm not going to be polite. But that lesson you will learn once and you will never learn it again, because now you know you've got to look at this thing every day, because this is what makes it go up and down. But it's all part of the learning process. At some point, someone's going to teach you that. And then this is why I've had so many mentors. I've done so many courses, because you've got to build up the knowledge of everything to be able to understand what the hell's going on and think, I don't fancy that because, but you don't know if it's right or wrong ever. That's the problem. So, you know, when you're saying about quitting your job, that's how much time you've got to put in to make this work. My EA will get you into lots of positions, but the CAD Swiss, I have intervened. The US dollar Swiss, I have intervened. If you haven't intervened, your result is different to mine. Your CAD Swiss, you've taken with the EA with exactly the same settings as mine. Your break even isn't there, it's up here because you didn't intervene. I've intervened because I saw an opportunity, because I've seen this play out millions of times in the past. And you can copy me, but I don't know if I'm right or wrong. I, last night, cancelled the stop loss order and put it back this morning. The reason I cancelled the stop loss order is because I know that they will spread at the swap. If you didn't know that, you will find out the hard way 3 or 4 times. You will have a different result to me, because all trading, regardless of whether you're using an EA mechanically or not, is still discretionary. You decide what happens with your money in your account. That's a learning process. We're having some real waffles, aren't we? I must have eaten something this week that's made me waffle. My wife made waffles. Last Friday, she made waffles. That's what it is. Backtesting results are always different because live trading has dynamic spreads and slippage. Yeah, again, that's a really good point, Seymour. You know, when you do a backtest, there's multiple ways to do a backtest. You can use the current spread. You can fix a spread, or you can use a variable spread, which would only be able to be working if I was on tick. Yeah, I could use a variable spread. So, you know, that will give you a completely different result. So if you run 3 backtests with a fixed spread, a current spread, and a variable spread, you'll get 3 different backtest results. That should be enough to tell you that if that's going to happen in the past, what the hell's going to happen in the future? One of those 3 things? I don't know. If I knew that, I'd do it. For position trading, 2K is the absolute minimum. 5K is more comfortable, yeah. So for position trading, as Diamond said, you've got to be able to get on a minimum lot size of 0.02 at least for every trade, if not 0.03, because you need to be able to do partial drawdown control when things are going against you. CAD Swiss, perfect example on the screen here, look. I've scaled out of that position 3 times. I've scaled out of that position twice. I've scaled out of that position twice. I've scaled out of that position once. Yeah. If you go in with 0.01 because you've only got $500, you can't scale out. This is an imperative part of position trading. Being able to reduce your risk using your profits. If you can't reduce your risk using your profits, you are basically getting in and hoping this thing comes back. Leverage. You've got to have minimum of 200 to 1 leverage, because you have to use your entire balance leverage sometimes. You know, there's again, it's all learning, isn't it? Thank you, Captain Lee. Good fortune and all good night. Selling my furniture to fund my funded account. Yeah, you can still trade sitting on the floor, Franco. The question you need to be able to answer is, what risk does 0.01 lot size represent? If it's 0.25%, then your account is too small. Yeah. It's basically just a case of, you know, you've got to learn how lot sizing works. There's so much to learn in this. You know, like I say, it's brain surgery. It's not fighter pilot necessarily, but airline pilot. Yeah, you're going to have to spend a lot of money and a lot of time learning how to do this before you ever get near a scalpel to open up someone's head, or you ever get stuck in that cockpit to be able to fly those 300 people 500 miles to go on holiday or whatever. Yeah. Yeah. If you want to learn how this intricate financial system that the entire world rotates on, you can't just read a book. It doesn't work that way. That's what everybody thinks, because everybody's got a Lamborghini and is standing in front of a big house and selling you a course for $199 to tell you how to do it. Costs over £100,000 to become an airline pilot. 100,000. It costs 7 years of your life and a minimum of 50,000 to become a surgeon or a doctor. Why do you think you can spend 199 and become a financial guru making enough money to buy a Lamborghini? Not the real world. AZ, I've been in the live rooms for the past few months, now learning what I can, not looking to rely completely on trading right away, but want to build up a small account and add over time. Yeah, position trading is the strategy that you do part-time. That's the other fantastic thing about position trading, is you can do it every day, right? You're trading the 4-hour charts. Yeah. So let's say you're trading the 4-hour charts and you started trading here. You get up here, you look at this and you go, I'm going long. You go to work, you come home, you look at this and go, haven't gone anywhere. That's it. It's taken you 5 minutes today, less than that, to do that. Brilliant. Right. Spend time with the family, have dinner, go to sleep. Get up in the morning, analyze the chart. We haven't gone anywhere. Go to work. Come home. We've dropped a bit. Okay. We haven't gone far. I'll look at it in the morning. Go to sleep. Get up. Analyze the charts. We've dropped. Okay. We've gone down by 3/4 of an ADR. I'll add another position on. Go to work. Come back. We've dropped down another. Okay. I'll add another position on. Go to sleep. Get up. We haven't gone anywhere overnight. Go to work. Get up. Holy crap. That news event. I better get another position on, right? This has taken now 1, 2, 3, 4 days of your life. You've been spending 1 minute a day position trading. You've got 4 positions on. You're in a position long on the CAD Swiss. Yeah. You're still in it now, right? You get up, you look at it and you go, this has gone way too far. This thing's massively stretched. I'm going to go with a bigger, aggressive drawdown control position here with a stop under the lows. You wake up, you go to work, blah, 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 rinse, repeat. You're still in the trade. Yeah. You're still in this, but it's taken no time at all to look at this chart on a daily basis. If you've got a job and you want to part-time trade and learn how this thing works, this strategy is absolutely perfect because you only need to look at the charts twice a day, once before you go to work and once before you go to bed, because it moves slowly on the 4-hour and the hourly charts. You haven't got to be reactive. If the news event has driven it down by 1 ADR today, fine, take another one. Or even better, if you've got the market reverse alerts EA, let that do this all for you automatically. And your only job every day, which is what my job is every day, your job every day in the morning is to go and look at this thing and go, anything I can close? Yes. Anything in big drawdown I need to do drawdown control on? Yes. Close. Come back in the evening. Anything here? Yes. Anything here? No. Wake up in the morning. Anything here? The EA is doing all this for you automatically. Your job is to check this. This is my job. Looking at this, looking at that, and deciding whether or not I need to intervene with it. I only get discretionary if I need to get discretionary. If the EA can manage a position with 3 or 4 trades and just get me out of it, I don't touch it. Does it all. I need to get involved when the problems arise. That's it. It's easy. But you can't do this if you've got a job because you're in the car when this thing goes. Can't do it. You can get the opening range breakout EA and you can get the EA to take this while you're in the car. When you get to the office, though, you're going to have to go, right, I'm in 1.5%. Okay. The entire day at work, you're going to be sitting there every 5 minutes going, you can't do that. 5 minutes if you work is out of the question at the moment. But this, when you add it to your portfolio, immensely increases your opportunities of making money when you can spend the time. You can't go straight into this. You can run the EA on full autopilot. Of course you can. But you know, this is what this whole discussion is about, isn't it? You're the trader. Your job at the moment working in the office is your job. This is a part-time income. Part-time incomes don't happen on M5, they happen on a higher time frame. Position trading is the only strategy I feel comfortable risking a decent amount of my capital on. Exactly. Because worst case scenarios are not bad. Yeah. I think the maximum drawdown this month has been, I think 2%, 2 point something percent. And that's happened this week. I think it's US dollar Swiss has just got over 2. CAD Swiss, I got, I think 1.7. You know, this is the worst case scenario, right? I've been in this US dollar Swiss for 1, 2, 3, 4, 5, 6, 7, 8, 9 days. 2 trading weeks I've been in this US dollar Swiss. I'm sitting in 1.7%. I don't care. It just shut it and go and do something else. Doesn't matter, does it? That's the whole point. The banks, when the banks are trading, they are not risking 1% a trade. They are getting in to a position. And if that position is wrong for 4 or 5 weeks at a time, they will be in drawdown. Hedge funds and pension funds will go into drawdown on the fund up to 40%. 40% drawdown. You imagine having 40% drawdown on your account. You wouldn't sleep. And I've been there. I have not slept because I've been in 18, 20% of drawdown. And I've been lying there at night going, God's sake, Aussie, tomorrow, please, when I wake up. And I've got up in the night at points and I've gone to my laptop and I've opened my laptop at 3 in the morning and gone, because the news was coming out at 2:30 on the Australian dollar. How did it go? Yeah. You don't want to be in that situation. And if you leverage too high and you risk too much, that is the situation you'll be in, and it's not pleasant. Right now, I can shut this out and go, screw it. I'll just take 1.5% off this month. But then I'll go off and play with the kids because I've got no stress, no pressure. It's stress-free as you can get. Every time you put an order, no one can tell me that every time they put an order into the market with a 1% risk and it immediately comes down within 10 minutes and loses the 1% of the account, that's not stressful. All right, I'll go short. Damn, there's another 1%. All right, I'm going long. Damn, there's another 1%. I've lost 3% now. The market's been open for 20 minutes. Not fun. That's futures. That's not fun. I don't enjoy it. But a lot of people love the adrenaline rush of that. And if that's you, do it. But you've got to find your way. You can't, no one's going to tell you how to trade. You need to discover what trading is and think, right, I love this way of trading. People that find position trading and find me go, I don't understand why I haven't found this before. Because nobody's teaching this crap. Because it doesn't make enough money. Because you can't buy a Lamborghini with it. Why nobody teaches this way of trading? Because it's not fun. Boring. I'm sitting there waffling away. My P&L's gone from 3.7 to 4.3 in the last 2 hours. And it's going up and down like that. It's not fun, is it? I have made 3.5 grand on the DAX, but that's different strategy. Different thing. One of them's for you, one of them isn't, or both of them are for you, and fantastic. Use them both. If you go on holiday for a few weeks, do you leave the EA trading? Yeah. I will try the week before I go on. I'm going away at the end of August. The week before, I will try and reduce. Depends what the situation is. But I would try and reduce my positions, my sizing and everything down. Not my sizing, but reduce my positions down. So that I get as flat as I can. But I take my laptop away with me and I become the guy that works. Yeah. So I get up in the morning in my hotel room. I have my coffee. I open my laptop. I scan through and see what's going on. And then I shut it. I spend the entire day on holiday. I come back just before evening. I'll have a look at what happens in the market. Accordingly, shut it. I become the guy with the day job. The EA is still running, but I may well shut some stuff off. If I go on holiday, for example, let's say I'm going on holiday next week. Next week, we've got 2 major, next week is nuts. We've got PMIs, followed by CPI, followed by the Fed fund rate, followed by the euro rate, followed by US dollar unemployment, followed by the Bank of Japan press conference and monetary policy statement. Turn it off. If that's the week you've got coming up on holiday, turn it off. If you've got a week coming up like this week, where we haven't got a lot happening apart from the Canadian CPI and the pound CPI, even this is a fairly decent week, isn't it? Maybe leave it running. If the market's flat and not doing a lot, fine. If the market's like a lunatic and swinging like a crazy beast, turn it off. Discretion. You decide. But I do leave it on. Yeah. Don't forget, if this is your job and you take 3 weeks off your job, you don't get paid. Yeah. So can you afford to go on holiday for 2 weeks and not get paid? If the answer is no, you need to leave it on. If the answer is yes, turn it off. Your choice. 4 hour and 1 hour for me, yeah. The longer the better. Is it worth to do H4, H1 and H1, M5, meaning trade those two strategies on separate accounts or totally different strategies? You can trade you mean H4, M15, not H4, H1. H4, M15 and H1, M5. Yeah, you can trade both of those on different accounts. You will find you'll get into the same trades. Look, US dollar Swiss, H4 extension was there. H1 extension was there. So you will have gone long on H1 and then you would have gone long on H4. Same thing, same trade. When the market's extended, the market's extended. You'll find it will get extended across multiple time frames. Look at the RSI dash. At some point, all of these have been extended over here as well. This is the H1 columns. This is the H4 columns. So if you're going to trade both strategies, separate them out, but you will find that you will get into you'll be very similarly exposed, but your entries and exits will be very, very different. Just trade one account is the best thing to do. If you're going to diversify your risk, like I do, I have separate accounts for separate strategies. I have a position trading account. I have my funded accounts, depending on how the month's going, no funded accounts or some funded accounts or a funded account. And then I have my own personal account, which I trade the S&P on. But at the moment, that's not traded. I haven't traded it for a year. But I think I'm ready to get back into it. Basically, I'm waiting for the market to enter back into a bull calm. And it looks to me like we're there. Yeah. But that is a totally different strategy, totally different exposure. I'm only exposed on the S&P, and it runs in a separate account with separate money. I have my own little ORB account, which I've set up, which is under 10K, which I am also trading the ORB on, which is why you keep finding I keep looking over there. Which is high risk. High risk, high reward, high chance of potentially blowing the account because I'm over leveraging on it, trying to do something which is double an account within a period of time. And I'm trying to set myself a challenge to double an account, kind of like the Lambo guys, compounding. It can be done, and it's a way of getting a quick injection of cash to help pay off the mortgage, basically. Yeah, that's literally it. I can overpay my mortgage by 30 grand a year. If I can double a 10K account twice in a year, I can pay 30 grand extra off my mortgage, which is going to knock between 2 to 3 years off my mortgage every year. So that's what that account is trying to do, but it's doing it with money that I can lose because it's high risk. I made a fortune on it yesterday. Fantastic. But I know very well that I can lose it the next day because it's high risk. So you've got to be aware of, you just need to be aware of risks. Yeah, this thing is an untamable beast, and it's going to move up and down very, very quick. We know that, we can see it. So just run separate strategies on separate accounts, because if you over leverage yourself on the US dollar Swiss, on the H1M15, H1M5 and the H4M15 or M5, whichever you want to run, they're both coming down hard. So you are double exposed, aren't you? You've entered that pair twice in the same conditions, which is position trading extension. The Swiss is the most powerful currency in the world. I only buy XXX Swiss at certain support levels. Otherwise, only sell X Swiss. I opened one long at Swiss. You are limiting your exposure, obviously, which is great, but you're also missing all the other moves. If you're only trading the Swiss franc, you're missing everything else. I don't know what my P&L is made up of this month, but there's 17.5% there. I can tell you very little of that is Swiss franc. But then again, it's different strategy, isn't it? Different people, different strategies, different ways of trading. There's no right or wrong. If you can make money, make money. All you got to do. It's your job. You want it to be your job, obviously. So you draw down on a long position. Price starts trending down. Could you keep the same position but start taking profits? Profitable shorts to negate the loss. That's hedging, yes. You could do if you wanted to. I don't, because I can't do it. I've tried hedging and I can't do it. You got to identify your skill sets, right? Everybody, and this is why I say you've got to do lots of different strategies. When I say in the boot camp, give this a month, I say give it a month because you need to see the positions play out. It can take a while to happen. But you need to find out what your strengths and what your weaknesses are. If you do any job, right, you'll go onto a building site as your first job when you're 18 years old or 20 years old or whatever, right? And you will have been working out in the gym for ages and they'll find out that you're really good at carrying hods of bricks up and down ladders. You'll become the hod guy, the guy that carries the bricks. You'll come in and you'll screw up chopping up wood, you'll screw up doing this or whatever, and the boss will come pull you over and say, have a look at this plan. You go, well, yeah, these are technical drawings, aren't they? There's a load bearing things and da-da-da-da-da, and all of a sudden you go, right, you're really good at reading plans, aren't you? You become the plan guy. Yeah. And all of a sudden you come in and you immediately take over people and go, you do this, you do that, you do that. And all of a sudden you get a house built twice as fast. Someone will go, that guy's a foreman. Same with this. You're going to come into this thing and you are going to be able to identify in one instrument how a thing moves, and you're just going to go, that's my pair. I'm only an index trader. I'm only a stock trader. I'm only a Forex trader. You're going to come in and you're going to go the M5 time frame. You're just going to get it or you're not. You've got to try things. You've got to try position trading. You've got to try scalping. You've got to try mean reversion trading. You've got to try trend trading. You've got to try it all, but try it all on separate accounts, right? At the same time, and see what you understand, see what clicks, and see what works. Because you can give 10 people a strategy and get 10 totally different results from the same mechanical strategy. Yeah, because people are trading, not the mechanical strategy. Yes, it may have a set of rules that triggers an entry, but where that exit is and where that stop is and how that's all adjusted, that isn't mechanical. And you're not going to know whether you're good at holding or bad at holding. And if you're bad at holding, you cannot be a trend trader. I'm awful. Look at my exit on the Aussie New Zealand. I'm terrible. I'm crap at holding trades. I've identified that. So my strategy means that I don't need a huge run to make money. So I've built myself around that. If you're amazing at holding and you can look at the chart once every 3 days, and by the time you've looked at it there, and there, you're up here. Brilliant. You're a swing trader. But you're not going to know that until you do and try. And this all takes time, practice. Yeah. Everybody's different. One of my mates that used to work in a bank, who I was mentored with a guy, he used to work in a bank. He came out, he got mentored by the same guy that I was in a group for well over 6 months. He does nothing but trade the S&P 500. Position trades the S&P 500. Intraday on the 5-minute chart. I can't do it. I've tried it. I can't do it. I either end up blowing an account, losing a fortune. And when I do get a position on that actually screams, I shut it. I'm awful at it. I know I'm awful at it, so I don't do it. I can't trade gold for my life. I don't trade it. You've got to do it all. So if you want to try hedging, So when you're in a big drawdown on something like the Aussie New Zealand, yeah, and you think, right, I'm in 1, 2, if I get into 3 positions and it pushes against me, I'm going to take a long. And I'm going to hold that long until I get my next reversal alert in and take it off. And I'm going to use that profit to reduce 50% of that trade. If it works, do it. Just try it. But don't try it in the account that you're usually running. Try it in another account. Set up 2 accounts taking the same trades and try hedging in one and see how you get on. People do it. There's a guy in the Mission FX guy. He hedges. Brilliant. I've seen him go into all sorts of trouble and blow accounts regularly doing it. But I've also seen him turn around and go, here's 15 grand. But so does everybody. Everybody has whacking great days and horrible losses. It's part of the game. But if it sits with you and you understand it and mechanically you can operate it and do it and you've got the time to do it, do it. Try it. No one is going to tell you what to do. It's your money. This market moves up and down. How you do it and how you utilize it is entirely up to you. And hedging, yeah, it works. I just can't do it. I used to be in a group that hedged, and it was kind of like a position trading strategy. It was basically an enter 3 times type strategy. It just didn't work because all you're doing is you're entering your risk. So you enter a third of it there, third of it there, and a third of it there. If that one works, you make a little bit of money. If that one works, you make a fairly decent amount of money. If that one works and you can hold it, you make a decent amount of money. But if none of them work, you stop out with the entire position. It's great if you can hold that. So the amount of times you get that and you hold it all the way back down to where the first entry was brilliant. I couldn't do that bit. But what they would do is after the second entry, they would then sometimes, some people would try and take a hedge so that if that one didn't work out, you would add to your hedge and stop out on the short. And now you've got 2 longs going in the direction, which was great. It sounded brilliant until then it turned around and went the other way and stopped you out on that as well. Which is just what I found as my experience when I was doing it at the time I tried it. But I don't even know if they're still going, but maybe they're still doing it to this day. But some people will make it work, some people won't. Whether you take an order there or there is going to have a big difference on your profit, isn't it? So whether you press the button there or you were out walking the dog and you didn't press the button till there, both of you doing the same thing at the same time get a different result. Discretionary. All trading is discretionary, but it has to be mechanically run with a system or strategy. You've got to have a reason to get in, haven't you? Aussie dollar Swiss. I'm just watching this Aussie New Zealand coming down. This Aussie's up at ADR. I've only got 2 positions on it, so I'm just going to shut this one out. I'm going to bank it. Maybe right, maybe wrong, but it's profit. And it's at ADR. And this Aussie's done a second leg up at ADR, but I'm watching this Aussie New Zealand rolling over. Aussie yen's stuck. Aussie CAD's rolling over. Aussie US is rolling over, trying to. So I'm just watching that profit. And again, prime example of discretionary trading. I'm watching the rest of the Australian dollars struggling to go higher. And I'm seeing my Aussie dollar Swiss P&L going like that. What I don't want it to do is that. I'd much rather see that be green today, 0.5% in the bank. Brilliant. Let's get on with it. That's the decision-making process. You keep the long until it comes back and take smaller shorts along the way to make money in case you need to close out the longs in a loss. Yeah, so that was kind of what I was explaining. Try it. See how you get on. I know ORB is better for funded accounts, but do you think the ADR reversal EA is capable of passing? Yeah, I have passed with it. I know it's capable. I've passed with it. I have passed a funded account with the market reverse alert CA using a stop loss. There you go. But it blew the funded account because when I started the account, I went in with 1% risk on a reversal alert on an RSI extension. So you could use ADR, doesn't matter. Use ADR, 150 ADR, something. Yeah. So whatever your condition, you need a condition and a signal. Every strategy has to have a condition and a signal. So the condition is either RSI or ADR. The signal is the reversal alert. Yeah. If when you start your evaluation, every ADR goes like that, all week, you will pass. If every RSI extension goes like that, you will pass. You're going to have some losers in there. Obviously, it's not going to happen 100%, but you're going to have some losers in there. But if you've got a positive risk reward and a strike rate higher than 50%, you will pass your evaluation that week. It's just trading. So you can use the market reversal alerts EA like that. I have done back testing on using stop losses with it, and it has a high strike rate and it has beautiful runs. But the P&L overall, I found, depends on the instrument. And again, back testing depends on the settings, doesn't it? What are you using as a target? 1.5 or 2 or 3? You're going to have a totally different result. But my point is, yes, you can take that ADR reversal. Let's look at them today, right? With a stop loss, Aussie dollar CAD. So you're short, your stop's there, you're in profit. 1. Aussie dollar Swiss. You are short. The stops, I don't know where your stop is, somewhere up there. Hasn't gone anywhere yet. If Aussie dollar comes down to here, Aussie dollar Swiss and Aussie dollar CAD have just made you 2%. Happy days, no stop outs. Aussie New Zealand. Your reversal alert, so that's ADR. No entry there. That's your first alert today. So you're in, you're short, your stop's up there somewhere. 3%. Aussie US. ADR hit. There's your reversal alert. You're in drawdown on that one at the moment. Your stop's up there. You're in. Euro odd. Okay. There's your ADR hit. That was your reversal alert. You're in. You're stopped out. Minus 1%. Yeah. So you would have been in there. I don't know where your stop is, but I'm assuming it's a little bit below than the low. You're out. You're dead. Right. So are you in again? I don't know. But if you are, and that goes up there, look at your risk reward. That's a tiny risk. That's a 5R. That's 5%. You lost 1% there and you made 5% there. Hang on, we're going to make 1, 2, 3. Aussie, US, 4. If the Aussie comes down, we've lost 1% there. So we're 3% up if the Aussie comes down today. But if the Euro and if the Aussie comes down today, the Euro odd is going to pump, which means we've got a potential to make 5%, maybe 4% on that one. So if we made 4% on this trade, we've made 4% on those ones just by targeting a 1R. 1R. Not going for anything more than 1R. Just literally get in, get out, 1R. That's an evaluation pass. So can you pass with the EA? Yes. Pound odd. Let's see if we've made money on that or we've got a possibility there. Right, so you've lost money on this one. So there's your low. New low is there. Reversal alert was there. Stop there. Dead. If you're taking a second entry on it, you're about to get in. You would have had one there. You're stopped out. So there's minus 2% there. You get on that one and you make more than 2%. And these, so basically, today, if the Aussie dollar pulls back, they all become winners. That becomes a winner. That becomes a winner. You see what I mean? Of course you can pass with the market reversal alerts EA and the ADR reversal set file. But when and how will depend on your stop loss, your take profit, and what happens today with the Australian dollar. Those are the three constants that will make your decision-making process as to whether it's a pass or a fail in prop a reality. Tomorrow, reset, totally different. I have no idea what ADRs we're going to get tomorrow, how big they're going to be, whether they're going to play out, and how far they're going to go. And I have no idea whether it's going to be 2 currencies, 3 currencies, or 1 currency that's going to hit ADR, because that will have a big impact. That's risking 1%. Are you going to get 5 losing trades in a row? I.e., you get these 4, give you a signal long, you're getting 1% on all of them. Every single one of them stops out because the Aussie dollar pushes and they all stop out. That's minus 4%. You then take one on that and it goes into drawdown by 1%. That's your account blown. This is the maths behind trading, right? I have no clue whether or not you can pass with this. I can guarantee 100% you can, and I can guarantee 100% it will also blow your account at some point. Because if you're risking 1% on a trade, you could take 5 trades. That's it. If you're risking 0.5%, you can take 10 trades. If you're risking 0.25%, you can take 20. Everything works and nothing works, dependent on the market conditions and the timing of your entry. You can't time your entry because the market conditions are random. So if you're going to use a stop loss, whether you pass or fail a prop account is down to the entries on that day. The market reversal alerts EA works brilliantly when the market reverses. A Bollinger Band mean reversion EA works brilliantly when the Bollinger Band mean reversion works. A trend breakout EA works brilliantly when a trend breakout happens. What is the market going to do this afternoon? If you can't answer that question, I can't answer yours. This is the reality of trading. There is no spoon, to coin Neo's term. This is Neo trading, right? No, this is John Wick trading. We haven't got Neo trading, have we? We got John Wick with his shoes. There you go. That was John Wick yesterday and this morning on the DAX. Yeah. That's John Wick the 3 days before. What just happened? Why is my account blown? I was on an E8 evaluation, making money, and now I haven't got an E8 account anymore. Market conditions. You know, this is why we made all these memes, because, you know, poking fun at it, no one knows what's going to happen, do they? Is identifying a bull market discretionary, or is there criteria? A bull market, it's just market structure. So a bull market, in the stock indexes, a bull market is a sustained rally. This is a bull market. Yeah. If you look at the Dow Jones, though, it's not a bull market. It's a range-bound market. So all a bull market is a sustained period of market structure, highs and lows. Trend. The problem with identification of trend, which is why trend traders struggle to make money, is you only identify a trend when the trend has started. By the time you've identified a trend, there is a potential for the trend to end. So you go for a trend, and this is where, again, it's all down to whose book you read, who you follow, who teaches you. If you are taught that a trend has to be a high, a higher low, a higher high, a higher low, we are now in a trending condition, that is where you're going to start taking your trend entries. Now, if it goes into a range there, your strategy is dead. If it goes into a trend there, you will win. If when you identify a trend is after a 50% pullback that then goes back above the 38 line, you will probably get into your trends faster, but you will get killed in a range. Yeah, there is no way of identifying reliably market condition, because by the time you've identified that we're trending, the S&P, I'm using this as an example because the S&P is something that trends all the time. It's manufactured for increasing the stock price. You know, this is tracking the price of the top 500 stocks in the US. Every company in the S&P 500's job is to return a profit for their shareholders. As they return a profit for their shareholders, their stock prices become more expensive. It's a never-ending cycle of perpetual increase. The S&P index will at some point be trading at 4, 5, 6, 8, 10, 15, 20, 20. Yeah, it's just going to keep going up, because as long as businesses trade and they return a better profit than previous, or the same profit as previous, their stockholders will be happy, the stocks will be in demand, and the stock price will rise. It's a supply and demand market. This thing goes up and up and up. So let's say, for example, you've identified that we're in a trend here. Yeah, because we went high, low, high, low, high, brilliant. I'm going to buy the next pullback. This is the problem with trend trading. 80% of the time, the market spends in mean reversion or pullback. So the identification of a trend is discretionary. At the moment, I think the US 500 or the S&P 500 is trending. If it's going to continue to trend, it needs to pull back to the 24.72 zone and buy there. And that is my strategy. My strategy buys here and exits up there. That's the other account I was talking about earlier. I do what Warren Buffett does. This is exactly what Warren Buffett does. I turned my EA off Christmas here with a loss. I took a loss and I went, this is too deep. And I haven't turned it back on since, because we're in a bear volatile market. My strategy works in a bull calm market, because bull calm markets pull back below the 24, above the 72 and pump. If you want to follow Larry Williams' bull calm strategy, he uses a bull calm strategy called the smash bar. And that is, you buy basically when you get a low lower than the previous day's low, and you put a pending order above the high of that day's candle. If the high of the next day's candle triggers it, you go long. If it goes down again, you repeat. If it goes down again, you repeat. It's a pullback momentum trend strategy. There's hundreds of them out there. They all work. Larry Williams' strategy was developed 15, 20 years ago. Still works today. My strategy works beautifully, but it only works in a bull calm regime. Market regime is critical. And this is why I use ADR, because ADR is dynamic and changes with market regime. If you use 50 pips as a stop loss on the pound US dollar, in 2 years' time, you're going to be in all sorts of trouble, because your 50 pip stop might be there. It might be there. It might be there. Don't know, because the market regime changes, and so does the average daily range of the instrument. You've got to use ADR. You can't use pips. You can only do a bull strategy in a bull market. It doesn't work in a bear. Yeah. So identification of it is key if you've got a strategy reliant on trend. If you haven't got a strategy reliant on trend, like position trading, it doesn't matter. I've got a video about trend versus mean reversion on the website. Mean reversion versus trend trading, which should you be doing? Yeah. Trend trading works, mean reversion trading strategies work in a trend as well as a range. And that is why you should be a mean reversion based trader rather than a breakout or a trend based trader long term. Because if you're a breakout trader, those strategies don't work in a range. If you're a trend trader, those strategies don't work in a range. If you're a mean reversion trader, those strategies work in a range. Yeah. So we can trade during a range. In a trend, the definition of a trend is market structure. In a trend, the market does that. It's not ranging, it's trending. Mean reversion strategies work in a trend. If you are a mean reversion trader, market regime has much less impact on you as a trader than if you are a trend trader or a breakout strategy trader. Because when the market is ranging, trend strategies don't work. Breakout strategies don't work. Only mean reversion works. The market spends 80% of its time in a range, 20% of its time in a trend. So do you want opportunities to trade 80% of the time or 20% of the time? Very simple maths. You'll only discover this by looking through the markets. This is the wrong one to do because it's a trending market. But yeah, so there it is trending. There it is ranging. There it is trending. There it is ranging. That's sort of a trend. But again, trend identification. Classify a trend. Ask 10 people that you know in trading to classify a trend. Pick one of them because they're all going to be different. They're all going to give you a different answer. And they're all going to be right. And they're all going to be wrong. This is one of those industries where everybody argues. Doesn't matter what I say, everyone will argue with me that I'm wrong. And everything that everybody else says, I think is wrong. Because there is no wrong or right. Your job is to make money. Yeah. If I go long on something, someone else tells me that they've just gone short on it. Why can't we both be right? Yeah. If I hit the sell button here and I'm right, and you hit the buy button there, you can hit the buy button there and also be right. Why can't we both be right? Our job is to make money. As long as the market goes up and down, we're both right, aren't we? You just need to know how to extract the money, not how the market, which way the market's going to go. You need to know how it moves to be able to extract it. You don't need a system or strategy that has a set of rules. You need to know how it moves so that you can identify when it's moved in a certain direction, that if you did something and it didn't work, you could identify a way to get out of the trade. That's the difference between position trading and stop trading. We don't get stopped out because we don't care which way it goes. As long as it goes, as long as there's news, we will win. As long as there's people wanting to buy and sell, we will win. As long as we're not restricting ourselves to being focused on one direction, we will win. But when you get in, is up to you. Doesn't matter, does it? I've got this thing for me, Euro Swiss, has got to go over an ADR for me to make money. Someone else might have another trade in the middle there and they've only got to get to ADR today to make money. Doesn't matter. I will wait longer than them. So many people have sent me their P&Ls. They're better than mine. There's no better, there's no worse. There's money, making money. That's all there is. Do you intend to run the ORB NASDAQ trades during US dollar news today? No. I'll trade them during the open. They are opening range breakout is for the open. That's why it's called the opening range breakout. Open. I'm not trading at the news. The news is 1:30. The open is 2:30 for me in the UK. But I will decide what to do based on what that does. If these unemployment claims come out ridiculous today and the US dollar crashes 150% of ADR and the stock indexes are all up at ADR, I probably won't run it, no. That's your question, isn't it, Mumo? Yeah, sorry. I understand your question now. Yeah, no, I don't know. I'll wait and see. Again, this is all discretionary. Yeah, I will sit there and go, not running that today. You'll run it and you'll make 5R. And I'll be going, should have run it. I don't know. Everybody that's been in here for a while now is hearing the same thing said every day. So hopefully it all sinks in. I ain't got a clue. Like I said yesterday, I'm going to record a new intro video and it's going to be something along the lines of, you are going to listen to a man sitting in a room in his house explain that he has no clue which way the market's going and you're going to pay attention to him. Think about that. Looks like another EU sideways. You think still potential short? I am short. I don't think I am. Big difference. I haven't got a choice. I'm short. This is the other big difference between position trading and stop loss based trading. When I get in short, the first time I get in short, I'm short. I will remain short until I am out of this trade, however long that takes. And I will hemorrhage money along the way until I get out, however long that takes. The market will get out of that position because it will not go up forever. It will come down. hopefully on the US dollar news this afternoon. If you want to get into it, though, don't get into it now. You're late. You've missed it. Or you might be absolutely spot on and exactly right. But it's just giving you a reverse alert long and a reverse alert short yesterday, which tells you what? As you've identified, it's not going anywhere. I don't know. This is the thing. You know, this is what I say. Everybody's looking for a way to predict where this is going this afternoon, right? I know for a fact when it's going, but I don't know which way because I don't know what the number's going to be. And even if the number is green, it doesn't mean it's going up because the market might have already been over leveraged on it and it might want to drop it back down to take profit. What will happen is it will move. The market goes up, the market goes down, and it moves through time. Those are the three constants we know about. Yeah. We don't have control over any of them. I'm short. When it comes down, I will profit. If it goes up, I will go into pain. And I have the decision-making process of I'm getting out. I will take maybe half of that off, and a third of that off if it breaks that high and just take a 2.5% loss and just release the pressure. Get that average closer. I don't know what I'll do. When you're trading a position and a portfolio, your decision-making processes are based on what is going on. You're not predicting the future. You're not looking at the past. You're looking at now, what's going on now. At the moment, I'm stuck in 0.79 of drawdown on the euro US dollar with 4 positions. That's now. This afternoon is this afternoon. I don't know. We will see. I really, 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 really want the US dollar to rally because I've got a couple of positions on the US dollar long. So hopefully it doesn't drop. But 11 o'clock, blimey. I need to get some stuff done. Right, I'll be back at 2:20 for the US session. This guy's waffle today, isn't it? And yesterday, I need to shut up. I am short too, just hoping for some money for the weekend. Yeah. If you're hoping for money for the weekend, Peter, you should be relying on what you earn already, not trying to make money out of trading just yet. Unless you're full-time, obviously, but yeah, it would be nice. Well, I don't think it's going to give you that much, is it? One thing moving? I don't know. I don't know what your account size is. Maybe you are. I'll be back this afternoon, 2:20. I'll be back tomorrow morning at 7:50, same time as usual, obviously. Anything you need, let me know in Telegram. I haven't looked at Telegram. There's 26 messages in there, and I've got about 14 or so direct messages by the looks of things. Half of it looks like spam. Good. So yeah, I'll be back this afternoon at 2:20. DAX is done. We'll see how we get on with the Dow. Fair old move on the Dow today and the NASDAQ. So I'll play it by ear this afternoon. Up to you what you do, obviously, but I will see where we are. We've got news. The news may do absolutely nothing, which is fine. If it does, we'll decide. Well, I'll decide what I'm going to do. But yeah, we'll see how we get on this afternoon, and hopefully we can continue this nice little winning run. Yeah, go from there. All right. So have a good morning. The rest of it. Anything you need, let me know. Otherwise, I will see you guys later. Have a good one.